we're doing it right tonight. Stay up late. We're gonna paint the town like a portrait. I don't mean to stare all night, but you know you wear that smile like you stole it. We don't have to stop if we don't close. Stay up, leaving handprints on the road. You're just too good, too good, too good for me. You're just so good, so good, so good to me. You're just too good, too good, too good for me. You're just so good, so good, so good to me. You're doing it right tonight, the way you move. You steal the room, it's so damn easy. I want that quality time, so come with me. We'll use our bodies like a movie. We don't have to stop if we don't close. Stay up, leaving handprints on the road. You're just too good, too good, too good for me. You're just so good, so good, so good to me. You're just too good, too good, too good for me. You're just so good, so good, so good to me. You're just too good, too good, too good for me. You're just so good, so good, so good to me. You're just too good, too good, too good for me. You're just so good, so good, so good to me. You're just too good, too good, too good for me. You're just so good, so good, so good to me. You're just too good, too good for me. You're just so good, so good to me. You're just too good, too good for me. You're just so good, so good to me.
You sit down and watch me as I sleep. You think that you want me. You put your hand so gently on my cheek. You sit down and watch me as I sleep. You think that you want me. You put your hand so gently on my cheek. You sit down and watch me as I sleep. You think that you want me. You put your hand so gently on my cheek. You sit down and watch me as I sleep. You think that you want me. You put your hand so gently on my cheek. You sit down and watch me as I sleep. You think that you want me. You put your hand so gently on my cheek. You sit down and watch me as I sleep. You think that you want me. You put your hand so gently on my cheek. You sit down and watch me as I sleep. You think that you want me. You put your hand so gently on my cheek.
I can't get a hold of myself, breaking all the rules, playing games with my health. My love said I'm gone off the rails, but I know it's okay, 'cause I do it so well. I'm in my 20s, living reckless, so turn the hourglass over and let's wreck this. It's a brand new world, I got a brand new heart, and every day I make a brand new start. I'm in my 20s, not in a hurry, I got a bulletproof chest so you can hurt me. It's a brand new world, I got a brand new heart, and every day I get a brand new start. All my friends take good care of me. Wherever I go, they bring me home when I got no place to be. All my friends take good care of me. They give me high, they're on my side as far as I can see. Yeah. I'm in my 20s, I'm the future, I'm a shaker, and I'm a mover. Got a vision coming from afar, gonna take me back to where you are. I'm in my 20s, now getting restless. Got some hip now on my diamond necklace. It's a brand new world, I got a brand new heart, and every day I get a brand new start. All my friends take good care of me. Wherever I go, they bring me home when I got no place to be. All my friends take good care of me. They give me high, they're on my side as far as I can see. I can't get a hold of myself, making all these rules, playing games with my health. And my love said I'm gone off the rails, but I know it's okay, 'cause I do it so well.
Hey, what's going on, everybody? Let me drop this down. Alrighty. Is it something I put together? What, the track list? Yeah. I have a little group of in my Spotify account. When I hear a song that I'm like, you know what, that's a good jam to listen to when I'm charting or trading. You know, I'll put it in a certain group. So how's everybody doing? It is Tuesday, and oh, sorry, man. Today was a hot day outside. I don't know about you guys, but for some reason, South Florida thinks it's the fall because every leaf on the trees are falling, and I've probably spent, I don't know, an hour each day now just policing up the leaves in my backyard. It's ridiculous. All right, let's see. We've got everyone in here. Let me just make sure. All right, I got the chat open, so if you guys have something, throw it in there. All right. We'll get started. All right. Man, my allergies are killing me. All right. So again, let's start from the calendar, right? obviously there's some good movement that's going to get some volatility in the market tomorrow. We've got core retail sales, which you could see they're already pricing in a horrible. I'm pretty convinced now that whatever these numbers are, if it's a beat, realistically the market's going to move positive for the US dollar. And if it comes in like a negative 10% across the board, it's just not going to move the market. I know last week it did diddly squat, and it was I think almost double what the CPI report was, but that's because they're melting. Yeah, I mean, I don't know. I'm really surprised if any of you have followed the equities markets. The Nasdaq today officially left the bear territory. So the S&P did last week, and the Dow did I think like 10 days ago. So we have we've lived through the shortest bear market in the equities history in the history of the New York Stock Exchange. So yep, yeah, the market is on stimulus steroids. Actually, I got my stimulus check today, so I will be definitely investing it. So yeah. It's crazy. It is crazy what's going on. But yeah, so we're gonna see some volatility hopefully in the US dollar tomorrow. I am still extremely leery of trading the Canadian dollar. I mean, just look what oil did today. It's a joke. You guys think you think I'm crazy? I'm telling you, we're going to see $17.50 on oil. But you know, I said we were going to see $20 back in November, and everyone was giving me the eye. But yeah, so we have Bank of Canada rate statement. Everything I've been reading they're going to stay the same at 0.25. You know, last March 13th they did that crazy from the 3/4% to 1/4%. Bonnie, I'm 100%. Listen, if it wasn't leverage trading, if there was a way to short oil without leverage trading, like I just put $1,000 in an account, just like if I was investing it but short it, I would do it. I know it's going to reach down for that gap. There's no other time that we'll ever see in our lifetime that it's going to be able to do it. So I know they're going to try and reach for that gap. So Bank of Canada, I don't see this changing very much. And then of course, tomorrow night, the Australian unemployment, which is crazy because their unemployment change, they're estimating negative 33,000. Actually negative 33.3 million. Is that what it is? Let's see. No, yeah, there's a decimal there. So 33,000, that's all they're estimating. And we had like something like 6.6 million last week. So I would venture to say that this is going to definitely be higher than they're anticipating, just from everything I've been reading from the Australian stuff. So I do see the Australian dollar weakening, but we'll see if we can pick some stuff up into it. And you can see right here on Thursday, they're estimating 5.3 million. That's it. And every week we've just been killing that every week. If you guys really want to take a look at how crazy the unemployment is, where's that chart? Hold on. Look at the graph. You can go all the way back and see how crazy it is. You know, we're talking about 300,000, 450,000, and they just come right over here. It won't even let you look at how large it is. Look at that. We go from 345,000 to the last 3 weeks, 3.1 million, 6.5, and 6.6. It's just crazy. How negative news doesn't bring down the equities. Well, you have to, it's not that it's negative news, it's what is the market pricing in. So when you're trading equities, Dave, you gotta, it's what is the market pricing in. So if just hypothetically retail sales, right, they're already pricing in a negative 8%. So if this comes in negative at like, negative 8, negative 9%, it's not going to drop US 30 and S&P 500, right? It's not going now. I'll tell you right now, if this comes in miraculously at like, I don't know, 1% growth, you'll see you'll just see it shoot up 1,000 points tomorrow. I don't think that's going to happen, but yeah, absolutely. That's why we have this. That's why when you see these forecasted numbers, that's what the market is already pricing in. So you can't go, it just hypothetically say Thursday, you're like, all right, I'm going to sell, US 30 and S&P 500 at 829 because I know this is going to beat it. You can't just do that. Because the market's already pricing in a negative, 5.3 million unemployment claims coming in. Yeah. So anyway, Thursday, that's really the only thing that's going to move is these unemployment claims. And like last week, you saw pre-market, because obviously equities markets open at 9:30 a.m. Eastern. At 8:30 last week, I actually was able to capitalize on a sell off of this number. And as soon as equities open, you just saw it just make a new high and tore it up. So, the actual traders are already pricing this in. They're going off of that. So that's really Thursday. Nothing on Friday. I'm really not even probably planning on trading on Friday. So it's pretty quiet. No pound news. No euro news. So we'll take a look at it. All right, let's get into it, and we're gonna go over some of the setups that I sent out as well. It was a little frustrating. This is honestly why I typically don't trade a lot in the beginning of the week, simply because the market is still kind of finding its way. But we'll go off of it. Let's take a look here. I'm opening up Telegram. And then, what, we're going to dive into some equities too, because I'm going to kind of show this was an awesome trade this morning. And I didn't take this trade here at, was it like 3:15, but this presented an awesome setup. I know Victor was waiting for it to come into that right there. And I'll kind of give you guys an idea. I'll show you on S&P how it did do that. But we'll take a look. Let's get into the DXY real quick. And so DXY, right? We were actually looking, let me go to the hour chart, right? So last night, when I was looking at the US crosses, I was going with the bias that we were going to come up, right? I've been bearish last week on the dollar, and I wanted to see, us be supportive by this right here. And this was the line that I had an alert on, right? Because I wanted to see price, when it came down here, I wanted to see that bounce, and gave a little bit of a bounce, but I wanted to see it fill in this gap, right? This gap from Sunday open. And we never really got that gap opening. I'm sorry, that gap fill. So the fact that, I woke up this morning around like 5:30, let the dogs out, and I actually, the alert woke me up too, but I had an alert set on this line, and when price broke the line, I had an alert saying for price, when price closes below the line, right? I went ahead and closed out my positions on US dollar crosses because it invalidated the setup. Especially since the market was not willing to come back up and fill in this gap, tells me that we are going to come and attack this gap right here. Okay. If I zoom in, you'll see some funky price action, right? So essentially what happens, right? We come into on the daily time frame, and this was the bias for the dollar going bullish. Where's it at? Right here. All right. All right. So this candle right here on the daily time frame, right? Yeah, Alfonso. Yeah. So absolutely. I want price to move away swiftly from it. I don't want it to linger. Okay. So this last down candle on the daily time frame, measuring that's 50%. You can see how we had a fantastic bounce, right? One day we're in a bear market. The next day we just all up roar on it. Okay. So I want to see what happens now as we come in and mitigate this inefficiency. So essentially we came in, we bounced, here's the 5 o'clock, 6 o'clock, DXY was closed. It reopens at 7. You could see how we have a really nice bullish move. And then at 8 o'clock, when Asian opens, we gap down and come back again. So there's a lot of inefficient price action here, right? There's no downside offerings. So I want to see if we come down to challenge this and ultimately what's going to happen. But for that, you know, we have a really nice move, right? We have a really nice area to get down into that area so that we can take advantage of some crosses. All right. I don't believe, or my bias right now is that this is going to hold, right? We are not going to break through it. Now, if we do break through it, you know, I have this huge daily gap right here that needs to get filled. You know, so we'll see what happens. Yeah, Victor, absolutely. I had it highlighted, you know, and if you start paying attention to the DXY, for some reason, Asian session right at 8 o'clock, so like 7:59, it'll close. And then 8 o'clock, it opens and there's always like a gap on it. I mean, look what's happening right now. Look at this gap between 6 o'clock and 7, you know, look at that gap right there, that 1 hour gap. So, you know, there's some funky looking price action in there, but the gist of it is I'm looking, now that we broke this level right here, I'm looking to at least get into this down in this area here. So what's that mean? I'm looking for some US dollar weakening, especially on the key you know, crosses of it. All right, so with dollar weakening, obviously we're looking for euro strengthening, right? Euro strengthening. Sorry, I've been inundated with messages today. It's crazy. All right, so let's get into like some of these indices real quick. We'll go over them. This is ridiculous. I'm telling you, right here. This is where oil's going, right in here, right in there. But to me, this is the worst structure I've ever seen in my life. I don't even know how people are trying to trade it. I can't make any sense of this. Oh, for the love. I gotta mute this. Okay. Where's the gap on oil? Like the big gap way up here? Up here in the 30s and 40s? You talking about like that gap? Or are you talking about the gap I'm looking down here? The gap I'm looking down there, I think it's back in like 2001. Hold on. It won't even let you go to the smaller time frames. I think I had to do it on a 4-hour. Hold on. We'll take a look at it. Oh, I got to go to the, yeah, it's not even on. Look at that. We only can go to the 2013. Is it daily maybe? Yes, the daily. Here we go. Yeah, 2001, 2002 was the last gaps on here. And the data, you know what I had to do? So the data isn't in here on the daily, right? The data isn't in here on the daily. I had to go to futures, CL1. Yeah, I had to go to the future side and look at it. There we go, down here. Yeah, there's a gap in here. Maybe on the weekly. My bad, guys. Yeah, so I was on the future side because this is the closest I can get onto the time frames. Ah, the monthly, that's what I got. Bam. See, this is why I like to label all this. So you see this huge gap on the monthly. I don't think we're going to see $13, but possibly 50% of that brings it like $14.50. But what I am very interested in is the liquidity. So you can see on the monthly, this last up candle, right? This last up candle was mitigated out to the 80%, right? So this candle was mitigated by this move here, all right? And in here, let me just highlight that. In here, let's go to a daily. This is what I was doing one day. I was a little bored and I couldn't decipher what oil wanted to do. Here it is right here. So you see this gap in here? There's that gap there on the daily time frame. So I don't have to drag it all the way across. All right, on the daily, that's there. And then let's see if I can go, I think the 8 hour was the one I went. Oh yeah, good call, good call. Yeah, no, I can't get any, it won't let me get any smaller now. Let me see the 12. Here we go. Here we go. Well, now you got me looking at it. Yeah, see, look at this. So it stops back when I was looking at this was a couple weeks ago, but now the 12-hour won't even let me get down in there. But yeah, so you can see this small little, let's just go right to it. So you can see this small little gap that I still want to get filled right down here at like 1800. But I personally, I'm not trading it. You know, there's really nothing, there's no structure, there's nothing, no entries. I can't make a rhyme or a reason for it. So it's not even worth me looking at it. Yeah. Yep. No worries. All righty. So let's get into it. So let's see, is Gary on here? Let's see.
Yeah, I'm here, Mike.
Ah, all right. All right. Got you, bro. Yeah. All righty. So I want to go over, let's do the S&P, right? So let's do it like this. So this is, I kind of broke it down, right? For, no, I'm not selling it right now. This is how I want to kind of attack this. We'll do it on a clean chart. Here we go. All right, we'll do it on a clean chart. We'll do it on the future side, right? So I wanted to show why did price, and this is how this is how I tackle charting, right? When I start to look at the market move and I start to see things like this, here, hold on, let me do this. When I start to tackle the market, all right, I start to ask myself, what is price? What are they trying to do, right? What is the market really trying to get at here, all right? And it's, to me, it's the most expensive and the biggest game of cat and mouse that I can find, right? All right, so let's go to the S&P. All right, and we're gonna go 1 hour chart. Let's see, this. Okay, so let me just back it up. Let's go to, we'll go back to like here. Oh, you know what? Futures, my bad guys. Futures won't let me do it. All right, here. Here we go. We'll just go to here. This is how I typically chart. This is what it looks like. All kinds of shenanigans like this while I'm catching moves. But all right, here are the plays. Let me just do this. We're going to clean it up. Let's just clean it up. All right. So we'll go on a 1 hour chart. Okay. Why do you look at both? What do you mean look at both? Look at all the charts. Every chart is different. It's easier sometimes if I have something marked up on forex.com's S&P 500, and then I'll use, like Awanda's one to mark something else up. It's just so that I have, I have 4 screens, so I'll have all 4 charts if I'm trading like this morning I was trading US 30 and S&P 500 just because the NASDAQ just took off from us. So I'll have all different charts up, and I'll be marking them up at different areas to see which one looks the best for me. Because ideally, that's how I trade it, is which one is the best one to go with at that time. All right, so let's just do this. Let's go replay mode, right? We'll just go right to here, okay? So ideally, what I'm looking for is what is the market trying to reach for, right? So in this area here, obviously you can see that we are in a bullish trend, right? We're in a bullish trend. And where is the most optimal entry that I can get in with little risk, right? Little drawdown, so I can maximize my profits, okay? That's ideally what I'm trying to get at, all right? So in this case here, what I'm personally looking for is that last downward movement, okay, that hasn't been mitigated out of, okay? And on the 1 hour time frame, it's this candle right here. And this is all I do to really, like today, I'll show you the US 30. I didn't take the trade in the afternoon because honestly, I was in the backyard doing stuff and I already hit my percentage. But I still marked it up, and when I came back in, it hit take profit. So I still go always back and, let it play out. But this is the candle that I wanted to see happen. So one of the things I'm personally always looking for is, in order for the market to move somewhere, it needs to grab liquidity, right? Just think of it, you're going to play a game, you got to pay the toll, right? You want to go, cross the border, you got to pay a toll. You got to collect money somehow, right? You want a can of Coke, you got to put your 50 cents or 75 cents in, all right? So you can see we have some equal lows, right? So the first question I ask is, where's the money, right? The money is sitting right in here. All right, because everyone has been taught, oh, look, we've got support, right? We've got support. So what are people thinking is going to happen, right? We all know that this market is going up, right? Everybody should see that this thing is going up, right? We are going up. No ifs, ands, or buts, all right? So where can the market go to grab liquidity, okay? And now, granted, this is at 4 o'clock in the morning right here, all right? This is 4 o'clock in the morning. So we're about 5 hours from the equity markets open, all right? Now, the other option would have been right in here, okay? Right in here, because you've got some more, right? You got equal lows, so here's some more money. Now, how I personally trade, so would the imbalance below the candle not worry you? You're talking about this imbalance right here? It still gives me concern, right? Because that needs to get mitigated. But remember, so the way I process this is 2 things need to happen, right? The imbalances need to get mitigated, but the liquidity needs to get taken. All right. So if the market comes down here, what's the play? You know, why did it come here, right? Other than to mitigate this imbalance, but it needs it needs that bias. And what about the one way down next to the lower equity? The one way down next. Okay, so I'm not looking lower than this, Bonnie, right? Is that what you're talking, lower than here? Okay, so where at? Down here, you're talking about?
Yes.
Okay, yeah, I mean, that could be another one in there. Absolutely, right? This could be another area of liquidity right in here, because on a smaller time frame, these are nice equal lows, right? If we go to like a 15, right, you could see that nice equal lows. Absolutely, yes. All right. So when I'm marking it up, all right, this is what I'm looking for. Well, where is the money, right? Where is the money? This is S&P, right? This is the S&P. So you have to think, okay, the S&P, all right, in 8 hours during, let's see, what time is that? That is during Asian into New York Open, right? So realistically, 2.5 sessions, all right, moved 1,200 points, all right? So I wouldn't be looking anywhere lower than this, because it's unrealistic to think without some really big fundamental reason, I don't know, an all-out world war or something like that. We're not going to see a huge drop, overnight, right? It needs a fundamental reason to do that. If we're just talking about just regular market algorithmic trading, nothing below here is what I'm looking at. Okay, so I've identified these things here, and now from there, it's just a matter of finding where the market wants to reach for, right? So we've identified, why it would reach here, right? It would have the liquidity to grab from these spots to take it higher. All right, it needs to one, take buyers out of the market, right? Take people that are trying to buy, and then it needs to fake out sellers. All right, so anyone who's saying, okay, look, we have a perfect example, right? Anyone that would be saying, all right, we have a zone here, right? We have a zone here. Call a zone right there. All right, so any breakout traders, right? All right, as soon as it breaks this key area right here, right, we're going to sell it down. And then, obviously anyone that's doing a break and retest, all right, once it breaks that, on the retest, we're going to take it down. So the market, think about it. These traders, okay, these traders have been taught all the retail trading patterns and strategies. So again, it's the biggest game of cat and mouse, right, that you can find. So I've identified where the pool of liquidity is. Okay. Well, now it's a matter of finding, and I like to go to the 4 hour, and then I kind of just work down, right? So on the 4 hour, are there any up candles, or I'm sorry, any down candles that haven't been mitigated out of? And I just start going down. Okay. You can see, let me pull this up. You can see, so this candle right here, this down candle, all right, was mitigated by this, right? You can see that, bam, mitigated. All right. Then, do we have this candle? Has this candle been mitigated? Yes, right? This candle mitigated by this move right here, okay? So this has all been mitigated. Everything in here has been mitigated, and there's no down candles in here. So let me go down a time frame. And I literally just keep going down time frames. I've identified the target areas that the market's going to reach for, but are there any time frames or any down candles that need mitigation? So this one here has been mitigated out. This one here has not, right? However, I'm not really worried. Let me go the other way. I'm not really worried about this one. Okay, so that's in play. That's something I would potentially look for, is for the market to come in at least 50% to mitigate out of this candle. All right, and I just keep going down the list. All right, on the 1 hour, what do I have? Well, I've got this nice candle right here. All right. Now the thing I personally look for is I look for an entry below liquidity. Okay. So this in here to me is not a play that I want to take, right? This one here, because yes, the market's going to grab liquidity here, but this is a big run, right? This potentially could take the entire New York session or the entire London session to get down here. It needs to be something that's very quick. Pop in, pop up, right? Take stop losses, take buyers out of the market, trick out sellers, and then we're going. So this one is out of play for me. This one still is in play off of the 2 hour, okay? Because we've got nice areas of liquidity right here. The market can come in, pop up, and go, all right? I come down to the 30-minute. Do I see anything possible? Well, I've got this candle right here. That's right below it. Again, this one here, but I'm not looking to play that one. I would need to play the lower one. All right. So on the 30-minute, you can see it would look just like this, just like that. That would be 50%. That would be my area that I'm looking to enter in off of. All right. Let's just see what the 15 looks like. All right, 15. I don't see anything clean on that candle. All right. Again, nothing down here. And then on the 5, nothing here as well. All right. Did I miss the 1? Because the 1 is the one I took it off of. Yeah, there's the 1. All right. So we lined up on the, was it the 15 or the 30? 30. So you can see the 30-minute and the 1 hour are not a huge difference, right? You can either select to go off of this 30-minute or go off the 1 hour. You know, we're talking about, I think, maybe a point difference. Yeah, a point difference. I personally went off the 1 hour, but that's the play, right? The play is this candle needs to get mitigated out of, because the market, some trader for some big money market caused price to sell down and then turn around and bought the market up. All right. So they need to hedge out of that position. Do I know if this one is going to be correct, or do I know if this one's going to be correct? I don't. So I take both of them, right? I have a setup for here. If this gets hit, I'm coming down to here. All right. I'm not concerned about this imbalance right here. Okay. I'm not concerned about that imbalance in here, simply because the market has no reason to come down here to mitigate this out without going further. Like, it's not going to just turn around here. All right. It would need to come down and mitigate out of a position that grabs liquidity. So how would this line up? Like, what am I looking for? All right. So the first thing I personally would be looking for, okay, in a situation like this is, where are my, we've identified what the entry is. What's my risk, right? Well, the market, there should be no reason to hold a position any lower, right? So 50% is the entry. There's no reason to hold it any lower than the candle open and close, right? No reason. So that's essentially your risk. You're risking 6.3 points, all right? With a spread, I know on my 2 brokers, the spread can be, just about 1 point. So, account for that 1 point. It's that simple. All right. So 7, we could call it 7 points is what you're looking for in the S&P. All right. And then what's the target, right? What is the target? I always like to go back to equal highs as target number 1. So this would be target number 1 for me right up here. So even at that, right, even at doing that, I'm already looking at an 8.5 to 1 ROI. So let's just say you have a $1,000 account and you're going to risk 1% on this setup. Okay. 1% on this setup means that you can use a 0.01, right? A 0.01 means you're risking $7.20. All right. If this does happen and you lose, your $1,000 is going to go to $992.80. If you win, you're going to make $61.70 on this. All right. If you risk 2%, just come in here and just change it to 2%. All right. Bam. Now we're looking, you can use a 0.02 lot. All right. you're risking, again, the same amount, but now if you take the loss, it's $985.60. If you win it, you're going to win $123.40. All right. I don't mind taking the loss, because if I take the loss, I know we're going to go right to here. All right. And then from there, what are my next targets? If there's anything to the left, I would be looking for areas of liquidity. Okay. I mean, just looking at that here, I'll tell you what, just looking at this on the 1 hour, look at those equal highs right here. See that equal high, right? Equal high. And if the market doesn't go, I haven't seen it, but if the market doesn't go and clap that, that's going to be exactly where my take profit's going to be, because that's where all the money is, right? That's where people went short here, and especially that's where somebody went short to cause the market to come down here. Okay, so that's the play, right? That's the play. We'll see how it comes out. Let's see. Bam, 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 bam. All right, so I'm in the market, right? We are in the market. Almost clapped us out, right? You can see that it came relatively, let's see. Well, it came right to the base. So hopefully it didn't clap you out. That's why I like to throw that extra, like 1 point in there. But that was the play. And that's the reaction you're looking for. Is that right? No, that's at 8 o'clock in the morning. All right. So that's the play. And there you go. Right to take profit. So if this didn't hit your stop loss, right? If this didn't hit your stop loss in 1 hour, you made your 8.5%, or if you risk 2% on it, you made your 17%. You're done for the day. Have a good one. These are the days when you see me throw in the chat, hey, I'm out. I hit my percentage. I'm done for the day. There's no reason to go any further. All right. You have to understand, why did the market do that? What happened here, right? When the market came down, it grabbed liquidity. So it took everybody that was buying here, especially like on this fake out here. Everyone that came here, oh, look, we're going up, took that market, that everyone in a buy off of this support level is out. Everyone that said, all right, if it breaks this level here, we're gonna sell it. So this candle here closes below. So anyone thought that this was going to be a retest, boom, we're done. All right. So that's exactly how that played out. All right. And then it's just a matter now of playing it again. What's the next move, right? What are we looking at happening from there? Let's see. So that play now took the liquidity, right? Took the liquidity out of the market. All right. And I personally don't buy at highs and I don't sell at lows, right? So if I want to sell, I want to sell from up top. If I want to buy, I want to buy from the bottom. Pick this candle right here, Bonnie, because this was that last down candle, right? This was the candle that some institutional money came in to sell the market down. So this is what needs to get mitigated out of, all right? This candle here. On a lower time frame, this is, let's see. And look, we could even use a tighter stop if we went off the 5 minute. Honestly, there's no size. Just look. Every down candle has to get mitigated out of. So, like, I didn't even look at this on the 5 minute. I should have, right? So you can see, right? We have a gap in here on the 5 minute, but now we do have. I always do this wrong side. So we could have used an even tighter stop, right? So on the 5 minute, I guess I didn't go to the 5 minute. I should have. See this down candle? It hasn't been mitigated out of. It needs to be at least mitigated 50% of this down candle, right? There you go. So we could have even gotten out. We could have even got a nice tighter position, right? going off 50%. Stops just below, all right? So on a 2% risk, right, 2% risk, you could have used a 0.05. And if you were just going to take it right back up to these highs, right, I mean, you're looking at a 17-to-1 ROI. Yeah, Victor, I mean, most of the time, I would say that 5 and 15 is where I'm at. You know, there's some times where I have to bounce to a 1 minute or, you know, sometimes a 30. But yeah, I mean, I start from the highest time frame and I just work down. Okay. Yep, absolutely. So, I mean, that was the play. You know, I mean, in 1 hour, you just made 35% profit on one play. And if you, and this is the one thing that I can't stress enough. I'm okay with losing this, right? So me personally, I've just been risking only 1%, right? So me personally, I'm willing to give up $8.60 of my $1,000 account to make $131.20. All right, because I can get in here and find this move. Now, like I said, if this clapped us out, guess what? We're coming right back and we're going to play it off here. Okay, I might take, like today I took 3 break evens on US 30 before I finally, I'm sorry, yeah, 3 break evens on S&P 500 before I finally caught a nice move on my small account. All right, I couldn't take the US 30 trade on my small account just because I think something with the risk on it. I had to do it on the big account. But that's the move, right? So now what are we looking at next, right? Again, we're in buy mode, right? I'm personally only looking for buys on this, okay? So what's the next move, right? What is the next move that we're going to play off of? Well, here we go. So this is 9 o'clock. We're going to look for 9:30 equities open, right? That's the play, okay? I personally wouldn't even, there's no move there, but what I'm personally looking at is this last down candle, right? This down candle has to get mitigated out of. Oh, every time I do this, right? So from that candle to that candle, that's the move. That's what I'm waiting for. I want to see if price can get down here and mitigate out of this candle. Okay. Is that the lower fib mark still valid? This one down here, you mean as far as like to keep an order on it? I mean, it eventually needs to get mitigated out of, you know, until price comes back down and mitigates out of that position. Yeah. I just personally, I'm not, the way the market's been trending up and down, I don't keep orders open very long anymore. But yeah, that has to get mitigated out of. Okay. So you can see we kind of literally just kind of trend in here, right? So there's another position we could get into, right? We obviously see on the 1 hour, right? You see that imbalance on the H1, all right? That H1, that needs to get filled. But how can we crunch our stop loss, right? Because lately I'm all about being in trades a whole lot less time than I am about catching more points. You know, I just showed you, you could have caught this move right here, you could have caught 35% in 1 hour on it. Okay, so here's like a good example, right? So you can see this last down candle on the 15-minute has been mitigated out of, right? Because this wick comes back to, I mean, you don't even have to put a fib on it. You could see it comes back to almost 50%, all right? Nearly 50. So this has been mitigated out of. See these candles here, I don't like how they look. This isn't what I'm looking for. I'm looking for down candle with an up move, right? I'm really not looking for a small little doji. Let's see what's down in here. And all this has been mitigated out of, right? It's this candle here, that's been mitigated by this candle here. That's been mitigated. So the 1 hour is the play I'm going to go off of. Okay. Yeah. Yeah. I'm looking for, and typically what I like to do, and I'll show you, I'll keep showing you examples. Typically what I like to do is a full body candle, right? A full body candle. Even though that this is like an elongated spinning top, it's still a pretty decent candle, right? But everything else on the smaller time frame. So like here, this, I wouldn't play this, right? I wouldn't play that. I wonder what the 4 hour, like this would have been a good candle, but it's been mitigated out of. Let me see what the 2 hour looks like. 2 hours. So this here would look nice as well, right? That would need to get mitigated out of. Okay. That would need to get mitigated out of as well. No, I'm not even looking at that. That's just way too much wick on the downside. Even on the 2 hour, this is just long wicks, and I'm not trying to get, because you have to cover, you have to get down to like the 1 minute and try to find where your risk is. So I mean, even if you wanted to take it something like that, let's just say hypothetically you wanted to take it off this 50% of that 2 hour, your risk would still need to be probably somewhere down there. Okay, so you're risking 14 points. And on a 2% of $1,000 account, you can only use a 0.01, right? A 0.01. I would be more inclined to take this lower entry, right? So take this lower entry. We can crunch our stop loss. Here's 50%. So that is 4.3. Again, I give it about a point. So let's go to 24.3. So I'm risking 5.3 points, right? 5.3 points. And I'm looking to take this back up to the highs, right? Back up to the highs, okay, somewhere up in here. Or, if you want to be conservative, right? If you want to be conservative, start looking at taking it to like imbalanced areas, right? So, wherever the next candle closes, potentially maybe even something like this, okay? Because the market needs to fill out that inefficiency. So even at this move right here, you're looking at a 12.5 to 1, right? You're looking at a 12.5 to 1. Oh, there goes that idea. All right, bam. Let's, hold on, son of a gun. I want to back it up. All right, hold on. Give me a sec. I want to go to a 15-minute because that kind of, I didn't know it was going to do that shenanigans. All right, so this idea has been thrown out because it's been mitigated, right? That's been mitigated. So where is, and here actually we're looking at afternoon time, right? So here's your sell-off, 1 o'clock, 2 o'clock candle, all right? If you wanted to sell this down, it's a higher risk, right? But you very easily could have done it if you wanted it. I mean, the risk is a little too much for me, but off this 1 hour candle, you can see that's 50%, right? You could have taken that and sold it down because that this has to be mitigated, right? That we're going to have to mitigate off of that. Come on. So that's how that play. I mean, you could still, is this 1 or 2%? So on a 2%, you could have used a 0.02 and just take it to this imbalance right here. I mean, that's a 2.5. You're looking at 5% by taking it. Well, there's market close. Yeah, that probably I wouldn't have done that. Not at 3 and 4 o'clock. So close to. I don't like to trade 3, 4 o'clock Eastern time, just because the market does all kinds of whipsaws and all that. But let's go to the 15-minute, right? So here's what I'm looking at. Let's just see how the market would have played it. So 15-minute, you have that big spike at 6 o'clock up. Can anyone tell me what did this 6 o'clock spike accomplish?
Took out liquidity.
100%. Yep. Exactly. Exactly. Right. Just think about everyone that was trading this off of a pattern, right? And ugly head and shoulders, right? Anybody that was doing that just got smashed. Okay. Think about all of the stop losses that were here, tons of liquidity up in here. So absolutely, that's what that 6 o'clock push did. That market open ran the liquidity up top. That's the move that used to trap me in a buy. Yep, absolutely. That's exactly what it's intended to do, right? It's intended to trap you. Okay. Alfonso, so directional bias for the indices are, I mean, you can go on the bigger time frame, you know, I mean, just look at the 4 hour, right? So on a 4 hour time frame, I mean, what's our trend? It's down on the 4 hour. Nope, it's up. It's up. Absolutely. Just look at it this way, right? I personally, I like the 4 hour on the indices just because it's the daily kind of gets a little, it used to get a little confusing, right? Because you had smaller candles, but lately the dailies have been out of control. But if you take a look at it, right? So we'll just go from here, all right? So here was our low. We made a lower high, right? Lower low, lower high, lower low, lower high. We'll just say a lower low, okay? This was our low. So we needed to break above here, right? This previous lower high to take out structure and change the trend. This here was not a break of trend. Don't think that because we broke this, this is a bull market. No, all this is a pullback, right? This was a pullback off of this move, all right? You know, this is just a bunch of sideways consolidation, all right? But essentially, once we did this, now we made a higher high because we broke this previous low, right? This lower high, we've broken it. We came down, we made a lower low, and now we've made a lower high because we've broken above here, okay? Does that make sense?
I have a question.
Yes, go ahead.
So right there below your line, where you were coming down lower high, lower low, lower high, lower low, right below your line. Yep, oh, right there at that white line.
Yep, this one here.
Okay, why is the one right below your, like, straight down? No, oh, to the left.
Okay.
Left. Okay, straight down. Okay, now you come up, but you don't take into consideration the up move right there under that arrow, or under your arrow.
The up move under my arrow.
Yeah, now bring your arrow straight down.
Okay, here.
Yes. Why is that not a lower?
A lower what?
A lower high.
Why is this one on a lower high?
Mm-hmm. And then lower high, lower low, and then break a structure on the next one.
No, because this honestly, so all right, here's your low right here. Hold on. Let's clean it up a little. Right.
Okay.
So this move here is your downward expansion, right? Okay. Bam. So you impulse down.
Okay.
You pull back.
Right.
Okay. Now you expand. You're saying that this is your next low, and then this is your next high.
Yeah.
All right. Well, let's measure it. I mean, to me, it just doesn't look it, but let's measure it because it needs to be at least 50%. right?
Okay.
So from this high to that low, 50%.
Okay.
So we can say, sure, that, then we go sideways, right? Sideways. And if you want to call this a high, all right, we can.
Okay.
That's a low.
Okay.
That's about a 71%. That's your low.
Okay.
All right. So yeah, I mean, technically, if you broke, when you broke here, well, no, when this candle here is what broke structure.
Okay.
Yep, that candle.
Okay.
Yeah. So it needs to, for me, structure has always been taught it needs at least a 50% pullback.
Okay.
All right. Yeah, yeah. So this blue candle right here is the market structure break. So yeah, yeah. But
And then
either way, we're still in a bullish market on the H4.
yes. So then you start doing low, higher high, higher low, higher high, right? And start
Yes.
moving up.
Yep.
Okay.
Yeah, yeah. Yep. Now, I mean, absolutely. So 100%. Me personally, though, I haven't been able to swing trade the indices lately. You know, it's to me, it's been crazy. I'm just catching that intraday move.
Okay.
Give me a sec here. Is everyone cool with the structure? Breaking the high that preceded the fall. Yes. Yep. You got it, Matt. All right. So going back, yeah, it's not that it's too volatile. It's just honestly, here to give you guys an example, right? So off this move right here, right, you were able to catch, what was it, like 17%, okay? But if you were going to trade it from the previous low, right, if you were going to trade it, you know, let's see, hold on, let's go to the 4 hour, right, just to give you an idea why I can't trade it, all right? So let's just go from low to high. No, that wasn't even 50%. Even if I want to go to here, right? Say we took it off of that to swing trade it, say we took it off the 61, I would still need to at least be anywhere from the 88.6 to the 100. So let's just say just below the 88.6, right? I mean, I'm risking 59 points to, if I take it up to the negative 27, I mean, I'm catching, it's a 3-to-1 ROI, right? A 3-to-1 ROI. And I've been in this sucker for a day and 16 hours, you know? So for me, it just hasn't been worth it to swing trade it. I'm just catching that intraday move. No, Victor's 100% right, man. The intraday move that we're catching on the indices these days is typically what I was catching on a swing trade move. So it's ridiculous. All right. All right. So anyway, going back to this setup here, right? So there's our entry, right? This took the liquidity out of the market, right? So all the sellers are now out of the market. All the buyers are now trapped in drawdown. Okay. And you can see on the H1, so that's the H1. And then when we come to the 15, right, you can see that we have 15-minute imbalance here. All right. So we have 15-minute imbalance here, and you can see that 50% lines up just above this complete imbalance fill. All right. So you could play it off of the imbalance, right? You could play it off the imbalance if you wanted to do 50% of the impulse candle that created the imbalance, right? My entry is at 27.29. You could have taken it off 27.36, you know, and typically that's how I kind of play it. I'll split 1% risk here, 1% off this 50, just so I make sure I don't miss the move, right? So I mean, ideally, that's how you can play it. If you want to be a little more conservative with your lot size, right? You know, the risk still has to be, you know, below this candle wick, right? And, you know, just taking it back up to, you know, the highs And actually it wouldn't even be the highs because the highs have been taken, right? There's no liquidity up there. So you got to figure out where the next liquidity is. But let's just say we take it up to like this area here, right? I mean, you're looking at a 4 to 1 ROI compared to a 9 to 1 ROI, you know? So for me, it's more worth the risk of not getting into the trade to catch that one little crunch. Because if I get that one move, I'm done for the day. All right. And there you go. Order's been activated, right? I could delete that. So order was activated, right? Right off the 1 hour time frame. And that's what that was. It mitigated this candle right here, mitigated out of that position. Okay. So whatever money, right? Whatever money caused this move down has now mitigated and is either broken even on their trade, or they, you know, they took a small little loss. Okay. So that's ideally what's going on. And again, my thought process when I'm sitting here, you know, looking at this, that's what I'm asking myself. All right, where's the money? Where's the liquidity? And what's the move? What, you know, the cat and mouse game, what are they trying to do? Okay. You know, and ultimately that's the play, right? That is the play. So once that happens, right? Once that happens, where's my target, right? Where's my target? Well, I don't know what the next candle is going to bring, but you can see already there's some imbalance, right? We've got some imbalance right in here. All right. So wherever that next candle closes, all right. Where's the next? There. Okay. So here's the play, right? That's where my take profit is. My take profit is going to be in this area right here. Okay. That's my take profit. All right. So 7 to 1 ROI. So you're either going to make on a 1%, you're going to make 7% on this trade. All right. All right. There you go. Oh, well, one more. There we go. All right. So imbalance has been met to the pretty much to the pip, right? You can see that. So imbalance has been completed. Obviously, I probably wouldn't have taken this trade simply just because of the time, right? 6 p.m. is when the entry was, and you could see what you know, typically what happens during Asian consolidation, you know, and then finally 8 o'clock in the morning. So you were in this for the entire night, okay? The entire night. But that was the play, right? That essentially was the play. So now the next seek and destroy camp? Absolutely, yeah. Hold on, I'm trying to keep up with the chat here. It's on the other computer. Long way to get that TP. No, yeah. And that's the thing. You know, why put yourself through the stress, right? You know, and it's extremely hard too. I know some people have asked me like, hey, you know, Mike, can we do like a Zoom live call while we're trading indices? And, you know, I've tried it and it's just hard, especially, you know, me trying to explain these moves. Because think about it, some of these things are happening within 10, 15 minutes, and it's hard for me to explain it and get into it. Setting your TP at 50% of the imbalance is safer play. Yeah, I mean, you can, absolutely. You know, Dave, you set up however you know, if you're happy with those profits, take it. Absolutely, man. You know, you don't need to take every last drop of water out of the play, you know. I'm just looking to catch that nice move, right? I'm just looking to catch that nice move. So here, this is 8 o'clock. So New York markets are open. We're just going to wait for equities markets, right? That's all really what we're going to do now. Okay. So what's our next play, right? Well, obviously we know we're in a bull market. Okay. What is our last down candle? Yep, exactly. And I know in the boot camp I talk about your sleep point, right? If you can't fall asleep with an open trade, it means you're over leveraged. All right. It took me a while to understand that. And it's honestly, even with the lot sizes I'm trading now, I could sleep like a baby. I typically don't trade. You know, I don't remember the last time I got up for a London session. just because I don't need it anymore. You know, I'm happy catching, you know, these one moves. Like today, I caught that one move, 9-to-1 ROI. All right. So, but on this next setup here, obviously, we need to look into this candle. That candle in here is where we need to play. All right. Because we know we're going up, right? We know we're going up. We know that the market, yeah, Matt, I don't know what to tell you, man. I use the 0.01s on that small account sometimes just to fake myself out. So what we need, right? What we need is we need to figure out where is the money, right? Where is the money? Well, if we come, let's just say we come down to a 15-minute here, right? Can anyone see where the liquidity is? Anyone tell me where the market would most likely like to run to trap liquidity? Right below it, right? Everything in here, right? Everything in here is liquidity, okay? Because think about it, the market, and I'll tell you right now, there was probably, this here was another entry somewhere in here, all right? And then these here are entries in here, right? All this is entries. I mean, just on this 1 hour or on this 15-minute, you can see this candle right here, right? Came in right into the 50%. So all these, and this honestly is what fascinates me. This is what, you know, really caused me to really learn about smart money concepts, is because, like, listen, you're kidding me. You need to tell me that there's a reason that price came right to here and then went up, you know? So understanding that is what really led me to be really successful in trading. All right. But yeah, all the liquidity is here. All right. So there has to be a position somewhere in here that we need to mitigate out of. All right. Let's see. I mean, maybe we'll see. So on the 1 minute, no. Yeah. So on the 1 minute, this has been mitigated out of. So I can't find anything, right? Because you can see that this move back down here has been mitigated out of. All right. How can smart money? The trade house. I'll drop the link in the chat again, but just log into your IM account. And where is 2020? How do I trade? Here we go. I'll put the link in the account, and just go through their course. Once you're logged in, you can go through their course, just watch the videos, and then jump on their sessions, right? Jump on their sessions, but I'll post in the chat. Okay. So in a time like this, right, in an instance where I can't find an entry, right, this is where you have 3 benchmarks, right? 3 different positions that you can work off of, right? So if the S&P, and this is why you see me sometimes jump from S&P to US 30. If the S&P, if I can't find something in there, and it really wants me to sell AJ. Oh, wow, look at that. Look at that. I deleted the order too because it was getting late in the day. And I know AJ has ridiculous spreads. All right, whatever. Naturally, it's the time I delete the order that it does it. All right, so anyway, what I was going back to is, because I can't find anything, right? Because I can't find anything on there, let me just jump to US 30, right? So that was in here, 4:12, 6 p.m. All right, so yeah, we'll just come back to here. All right, so we know. All right, hold on, I confused myself. Bear with me, guys, sorry. It was the S&P. Is this the S&P chart I had? Yes, okay. Okay, so We'll go back to this like this. Okay. So I can't find anything in here, right? I personally didn't take this setup, but I just know because I showed Gary this. I looked for it on the, and it was actually in here. Let me see, was it on the 1 minute? Let me go to the 5. Let's see, was it the 5? Nope, 15. So if you can't get that first entry, right, which I didn't get this first entry. Let me see, hold on. Nope. It's got to be that 1 minute. If you can't get that first entry, just wait for the second. You don't have to be, like I always say, I don't have to be the first one to the party. Yeah, here it is right here. All right, so we're going to play this candle right here. Bear with me here. This is the candle that it played off of, okay? Right here. So in this instance, I think we were on bounce back for it, and we saw it play off of it, and then you just wait for the next move, right? You wait for the next move. Let me move it to, we'll just go 200. Oh. There we go. Okay. All right, so let's go to a 15 minute. All right, so where's the money, right? Here's the money right here. Here's the liquidity grab. All right, you can see this is market open, right? This is market open. We actually caught the sell on US 30, and I'll show you the sell that we caught, but it was off of this candle right here into this move. I did play it off wrong. My bad. Sorry, guys. There's the candle. See on the 15, this candle right here? That's why the market did that. Bear with me. There she goes. All right. So that's how why the market came right there, to mitigate out of that position right here. Okay. Now it's just a matter of catching the next move. That's all you got to do, right? That's all you have to do. So on the next move, what do we have, right? Well, you can see that this is the last down candle. Has it been mitigated out 50%? Nope. So at the 11 o'clock candle, seeing that, it's just a matter of waiting, right? Do we have anything on the bigger time frame? No. 5 minute. You could play the 5 minute as well, right? There's that one or the 5 minute. So in a case like this, I would split my risk, right? I would take one position off the 50%. Stop loss still has to be down here, right? So risk 8.3, and then do another percent right off here, off that 50%. And this is the one that'll pay you, because you can really crunch it down. So 1% risk on $1,000 account, 1% risk on $1,000 account. And then what are our targets, right? Targets are just take it up to the highs, right? That's honestly the easiest play that you'll get. So here's my target right up here. Okay, that's my target. There's some inefficiencies that you can play off of, right? You could see on the 5 minute, you've got that. I could play, let's go to a 15. Let's just see if it's a cleaner. Oh yeah, look at that. So you've got this entire range, you know, so if you want to take it into here, have a trailing stop, but ultimately, you know, that's where, this is our target. Okay, that's our target. So you're looking off of this play here, the market's already mitigated out and it's moved significantly away from it. So this tells me that we are going higher, right? This price action tells me we are going higher. So you're looking at a 17.3% and a 7% here, right? That's why crunching the numbers are extremely important to me. All right, so this top order gets activated right here. We're activated on it. So now, as we're breaking, you could see the structure, right? We're kind of making some nice structure here, right? Good night, bud. Okay, we're making some nice structure. We've broken this, right? So we're building on this 15 minutes some really nice structure. All right. So from there, it's just a matter of finding your entries. You know, if you want to take it off 15-minute and the 15-minute candles like I do, that's a theory that I like to impose. Hold on, bear with me. Okay. And this is exactly why you see when I do 2 entries, obviously this would have been the most optimal entry, but it played off of the 15-minute candle, right? It played off that 15-minute candle perfectly, right? You know, so we're looking at getting 7% on this trade, all right? But it came right into the 50%, took off. Let's go, let's see. What time is this? For this getting to the late days, but it ultimately, I'm sure, is going to take it that high. There we go. So ultimately, this trade took you from entry to exit 8 hours and 8.5 hours to catch you, you know, 7%. It was a slow day for S&P. No, I don't use the wicks on these. It's the body of the candle, right? It's the body of the candle. That's ultimately how that plays out. Okay. And then you can just back test it. Go back and this is what I started to do. Why did price go here? Why did price do that? Right? What is the reasoning behind it? All right. I'll show you. Bear with me here. Let me go. So when you're looking at it, right? When you're looking at it, let's look at what did today do, right? What did today do? Today was the 14th, right? Hold on, let's see. So if you look, and I sent this to Victor because I know he was playing the US 30, and this is where I caught S&P, right? So this was the 9:30 open right here. Okay. Here's 9:30 open, right? So 5-minute time frame, right? 5-minute time frame. This is the last down candle that needs to be mitigated right here. Okay. Last down candle that needs to be mitigated. All right. Can it come down into here? No, because look, see how this candle has already mitigated it out? This candle here mitigated that position out. All right. This candle here has already been mitigated by this candle here, okay? So this is that last down candle that I'm looking to play off of, all right? And then what's our targets, right? What are we looking at? Well, play it off the 50, stop loss. Yeah, wow. So stop loss was 1.4 points. So let's just round it. Let's make it an even 3. I'll make it an extra point, 2.4. So we'll make it 2.4, all right? And then just take it right back up to the top, right? To the equal highs, all right? That's the goal, all right? So we're gonna play off that 5 minute. And I actually caught, I caught the US 30 move. I caught the next 5 minute. I'll show you the next 5 minute that we caught. But ideally, that's what it is, right? There it is, bam, all right? Activates the order right off the 5 minute candle, okay? An instant, you're instantly in that 15 minute, 9:30 to like 9:35, you've made 4.8 to 1 ROI. So either, you know, almost 5% you've made, all right? And then you can see there it is. There's your TP. Yeah. Yep. Absolutely. Yeah. I played it off US 30 just because I was on bounce bat session, and that's how we played it, right off that 30 minute. You know, but it ultimately just kept playing. Let's see, the next entry. Let's see, where did we catch that entry?
No, you're not going out. You've been outside all day.
So, Mike, sorry, in that case, there, would you not?
Oh, my bad. Who was that? Gary? Go ahead and unmute yourself, man. Sorry.
You're all right. So in that case, there, would you not maybe try and trail your stop loss and not have your like maybe change your take profit so you can catch more of that move? No.
You can, right? You can. So here, let me go over to US 30 and I'll show you the candle I played, right? So here's the 9:30.
It still probably comes down to how much you're happy just to take as well, isn't it?
Here's the play I took, right? So it was off the 15 minute candle. Hold on. This was the play on bounce back today, and I still had it highlighted. Okay, so it was this 15-minute candle. There it is right there. Okay, so this 15-minute candle, right? That was the play.
Going out. She's out. You don't
Yeah, that was the play, and it was a 9-to-1 ROI is what I took, right? That was the stop loss.
What you call it? Angela brought me a chip from margarita.
Yeah. Oh,
To
really?
go, yeah. So they put them in those containers.
Okay, and then where were my targets? My targets were these equal highs right here, right? My targets were. Was there anyone's back there now? So here are my targets. Those are my targets, just taking it right up to that high. All right. And you can see that's what happened. I took it just to this high right here. So this one candle and 2 candles, well, let's say 3 candles. So in 45 minutes, I caught that. Actually, I think I had just a little larger. It was a 9-to-1. That's what it was. I had a 9-to-1 ROI. So I made 9% on this move right here, just off of that comeback to mitigate that candle, and I was done. Right. And I know what Victor was playing. Victor was trying to play the same thing. I had him lined up here, right? You could see this down candle here. I was hoping that was going to come into this down candle. It didn't. Instead, what did it do, right? This was the play. This is what I had set up on when I came back. I noticed that it hit take profit. I didn't trade it live. I just had it set up. You know, I identified this was 50%, but you can see that nice imbalance created by this up candle and this down wick, right? So I played it off of that. I played it off of that, and a couple of things I was looking at, right? I measured 30 minute. Yeah, I measured, where is it? Oh, here it is right here. So that was the 15-minute candle. Yeah, 15-minute candle. So you can see, if you were just going to play it off of that 15-minute candle right here, that's where the entry would have been. You know, you could have played it off 15-minute candle, or if you were just going to take it from imbalance to imbalance, right? That was the entry. You know, but your risk still needed to be below here. You know, but this move right here, right at 315 to market, essentially market close at 445 right here. I mean, that was a 5.5 to 1 off of that move. You know, but it's looking at where is, here, let me see, Victor, hold on. Is it a link? Oh no, I got to copy and paste it. Yeah, I know I was playing it off too. The S&P is the one that caught it off the 5-minute. Let's see. Yeah, so you can see here's Victor's charts, right? He was trying to play this first move right here, was off this 15-minute or this 5-minute candle right here, and it came just short. All it really did was just mitigate the imbalance and then take off from there. And then same thing here. The big move, he went down to the 5-minute, and man, what is that? 3 points, maybe 2 points. You know, that's the difference between making, you know, 9, 10, 11% and making nothing. All right, hold on. Let's catch up here. See and understand where the money is hiding, why price. Yep, absolutely, Dave. I mean, that's honestly, you know, why it truly fascinates me here. Bonnie, there is no answer. Honestly, that's why you see me split my my positions. You know, you'll see me do one off of this candle here, you know, and then one off the imbalance, and then sometimes I miss it. You know, I know you've seen in the chat where I miss an entry by 3 points on the Dow, and it ends up going for 600 points. You know, there is no I think the bottom line is the risk, right? Is it, you have to always account for the same risk. So on this play right here, right on this candle right here, the risk, you would have had to have always made that risk the base, right? If you were going to play it off of, here, hold on, let's see. If you were going to play it off of this 15-minute candle, right, where you were going to take it off of this 50, right, you could have played it like that, and the risk is always, right, the open of the candle, okay? Or if you were going to play it off of the 50% of that last down candle, your risk still had to be the same stop loss, right? So it's the difference, you know, and that's why, like I said, that's why I always split my positions and just take it right back up to the highs. It's the difference between a 13-1 and a 3-1, you know. There is no answer. I mean, I can't, again, it's the cat and mouse game. I can't tell you what that trader is doing at whatever desk is pushing the market, you know. I can identify areas that I'm thinking they're going to reach for. You know, and actually, hold on, let me just see. So obviously you can see the market's coming down right now, right? The market's coming down. They're going to play off something in here. That's personally what I think is going to happen. Let's see if we can find it. You know, but you could see this candle here. You could have played that 50%. Stop loss is just to the base, you know. And if you want to just take it to fill in the imbalance, right? Fill in that imbalance, or take it up, you know, to a high, you know, find an imbalance. Even that is a 7-1 off of this candle here. That's something I played off. I think that's why I had that in there. But here, let's take a look in this candle, and let's just see if we can see something that they're going to play off of. It's got to be, well, that's the 5 minute. Oh, did it again. Let's see if there's something on the 1 minute. There you go. There's the 1 minute. That would be the play. If it was actual New York session, that's the play I would take. I would take something like this off the 50, right? Stop loss realistically could be that 8 points. 8 points on the stop loss, and then take it right back up to the highs. Take it right up to the highs. A 23.6 to 1. I mean, that's how I would play it. I honestly, I wouldn't do it right now. I mean, it's Asian session, but I mean, that's the play. Let me catch up here. If you can please run through the exercise to find the next setup on NAS. Honestly, Julio, man, the NAS has just been nasty as crap, man. I try to get in on two. These were the only small little trades I was able to get in on today. I didn't even get on that one, but I got in off of this candle here. But it's honestly just when you look at how the other indices are running, this one's just out of control. It's gone extremely high. If you take a look at it, so let's just compare them, right? So you can see. So S&P and US 30, right? The NAS is definitely the leading indicator today. It is just extremely bearish. Oh, I'm catching up in the chats real quick. Right now is being less ROI obsessed. Star yeah, I'll tell you, Victor, honestly, I've gone, and I know I said this last time. So in the month of March, I only won 54 or 58% of my trades. But I still had, on the small account, I had something like 121% profit. On the big account, I think I was a little more conservative. It was like 58 or 54%, something like that, which is still on. I don't trade that big account as often as I do on the small. But honestly, I don't mind taking the losses anymore. To me, the ability to catch that one, I took the day before, I took three break evens, 2 losses, and 1 win, and that 1 win gave me a 13 to 1. So, and I'm only risking 1%. So, if I lose 5 trades, I've only lost 5%. I can take one more per my trading plan. I could take one more trade, and if that trade hits, I'm golden. You just have to be willing to take the chance of getting it with more risk and not getting risk. Yeah, absolutely, Bonnie. You have to be willing to take the risk on the trade. That's what it comes down to. If you can't take the risk on the trade, it's again, I'm just not hitting buy or sell. I'm trying to break down what I'm looking at. What is it that I'm looking at to try to get a bias. I'll tell you right now, Julio, I want to see at least some of this shenanigans, right, mitigated. It's You know, where's the money? You got to ask yourself, where's the money, right? The money's right there. The money is right there. We have a down candle, right? We have a down candle. Okay. That's personally what I would like. I would like to see mitigated out of. Hold on. Amazon made all-time highs today. Yeah, yeah. Tech. I'll tell you what. Tech was leading the way for sure. Per my trading plan, what's the max trades I'm allowed to take? I don't have a number of trades. My personal trading plan says if I lose 6% in a day, I shut it down for the day, and if I make 10%, I don't open another trade. So if I have open trades, I'll still manage them, but I won't open another trade. So like you guys, that's what you'll notice it. Like if I hit my percentage for the day, like I'm you don't see me in the chats anymore because I literally just shut everything off. One of my kids will take my phone and you know I'll be doing other stuff. You know, just because it gives me a break from everything. Yeah, Naz was definitely killing it. You know, I personally for Naz, you know, I'm not willing to take an entry up here. You know, I want to see some sort of man. I'd really like to see it come back into this candle right here. You know, yeah. I mean, I'll take a look at it again in the morning just to see how we mitigate down from from London or anything like that. I don't know if there's anything in here. Let's see. I mean, it could play off of this one here, you know, off the 15. There is some imbalance. There is that down candle right there, you know. So, you know, just to kind of give you an idea in my mindset, right? Hold on, let's see. You'd love to short it overnight. You, man, I don't know, Julio. Yeah, it needs to build more liquidity. You know, ideally, right? This is easy because you can see the liquidity here. You know, if I were to if I was going to give a setup, I would say that this would be it right here. You know, this is the safest setup to take right off that. You know, stop just below the low. You might not even need that. You could probably get away with right in there. And then just take it up to the highs. You know, I mean, that's crazy. That's a 20 to 1. That would be the safest bet. I don't think we're going to get down here, but yeah, it needs to get some more liquidity. You know, ideally, if you saw this play out, watch. If you saw, let's do this. Bar patterns. So if you see like this play out like this, right? If tomorrow morning we see that, you can bet that I will have an order in for here. You can guarantee that I will be looking to buy it sometime tomorrow morning, 85.72 off TradingView. Absolutely. Because again, you got to ask, where's the money, right? All the money is sitting right here. What do they need to mitigate out of? They need to mitigate out of here. And where are we going up, you know? And then from there, you know, I do have, now this is the only thing that I am a little cautious of on the NAS, right? So we are coming into a key spot. So on the daily time frame, is it the weekly? No, 12-hour. So you can see, right? So on the daily time frame, this position's been mitigated out of by here, right? On the 12-hour, the higher one's been mitigated out of, right? You can see this up candle has been mitigated by this candle. That's been mitigated out of. But on the other indices, those haven't. So that's the only thing I'm leery of. Yeah. You know, targets, where would my targets be? I just look for some imbalance that needs to be mitigated. Actually, here's my targets right there. I already got it marked. Right in here. That's my targets, those equal highs. Come on. There you go. There's my targets. That would be that. I'll tell you right now, if I caught that 30-1, yeah. But that's honestly, Julio, that's what I'm looking on that. Okay. So you guys have kind of an understanding? Is there any questions on? I know it's crazy. The only thing I can tell you is just keep plugging into the Trade House guys. Go through their courses of this. Yeah, sure. Here, I'll put it in the chat. I'm going to start looking at some Forex pairs real quick. And so here's what I'm personally looking at on Forex, right? Let's go to, hold on, what's that US 30 move? Oh, it's getting in there. Look at that. Yeah, look at that. I would have already been stopped out. Yeah. Now, I think, I personally, I'm not even going to look at this tonight. I want to see where we at tomorrow morning. You know, I do think we are going to go up higher, but what I was talking about is if you look on the daily on US 30, right? Look at the daily. Here it is right here. So this is that last up candle. If you just measure it, do I have it measured? Yeah, I already have it measured. See the measurement right here? So I want to see what happens around like 24,365. And I personally have my alert set for a sell off of this candle right here. So let's get to it. Here it is right here. All right. So this candle right here is the last candle that needs to get mitigated out of up top. Okay. This candle right here on March the 11th at 12:15 Eastern, that candle is the last candle that needs to get mitigated out of. And I potentially would like to take a sell, and I'm willing to just to risk a 1% on it. This is the move I personally am looking to catch on it. And it probably will happen like tomorrow or the next day. I'm looking to sell it from here. It's a tight stop, right? 33 points. And my target, if these lows aren't taken, that's my target, those lows into this imbalance. That would be a 1601 ROI, right? That's what I'm personally waiting on. But I want to, you know, definitely we could play it up. All right. Can you go over GJ? Yeah, sure. Absolutely. Yeah. Actually, you know what? We'll pull it up right now. Let's just see what they're. Do you know who called it out? Was it John?
I think it was Mauricio.
Mauricio? All right. Gotcha, bro. Oh. Let's just look at GJ. I haven't looked at GJ all week, man. Let's see. What are they playing? This is a 15-minute. Holy crap. What are they playing off of? Well, where's the money, all right? Money's right there. And you could see it popped up, right? We had liquidity here, right? It popped up. Ooh. It's off the 1 minute. All right. Yeah, you know, honestly, I haven't caught his the heck? His when's he come on? I think he comes on later in the day, right?
So
Um,
I think he's like Tuesday afternoon or
yeah,
Tuesday
yeah.
morning.
Oh, off this imbalance. I gotcha. Yeah, I mean, I agree with it, right? Because look, this area here, this was your stop hunt, right? This was the institutional move. And I personally think you can trim it down, right? So why did this happen, right? So if you're looking at it, so we have equal highs, equal lows on both sides. So this is just a quick intraday move. This candle, right? This candle took all the liquidity. So everybody that was selling here, right, is now out of the market. Everyone that had a buy stop up here, okay, is now out of the market or in drawdown, depending if they had a stop loss. So you have imbalance. Now it's just a matter of finding the candle we want to play off of. Let me just see what that 4 hour ain't no way. 1 hour, nope. Aha, there we go. That's what I look for, right? I look for a nice round candle like that. So let me just see how I would play off of this. Bam. All right, so they need to mitigate out of that position right here. Nope. I want to just see if I can play off any of these up here, get a tighter stop. Let's see. Any of these 1 minutes been mitigated out of? Haha. Man, that's so you could see this candle needs to be mitigated out of. However, I mean, this is one of those that I would split my risk, right? Go the other way. I always screw this up. All right. So those are the two plays I would do. And then, oh, really? Cool. Yeah, I might have to catch some of his recordings. So those are the two plays I would play. So all right, so entry one for me would be like here. Stop loss doesn't need to be higher than that wick. And then I would do a ridiculous one right there, 1%. Even if you want to do 0.5%. So just make sure you account for the spread, right? So you're looking at a 2. If you wanted to make it with GJ, I think the spread's a little higher, so I'm gonna make it like 5. So that's how I would play it. And then what are the targets, right? So obviously this is take profit 3 down here, but where are the targets that you want to attack? Well, just look for the liquidity. Where are all the areas? You know, right now this is a target that I would look for, right? You got liquidity here. Right there, and then, you know, somewhere down here. I'd play it maybe off of these down here. But that's ideally, even if you just want to take it to take it to here. That's a 3-1. That's a good ROI. And this one here would be a 13, almost a 14-1. So those are the two plays. What was his entry? Let's see. His entry zone 35 to 40, 35 to 40, and mine's 33 to 38. And then up here. Yeah, I mean, I agree with it. I like it. It would meet my confirmations. I actually might even just throw an order in on it. You know, it meets everything. You know, it ran the liquidity, right? Now the play is that it needs to come back and mitigate out of this position. So his slot here, this entry zone is mitigating the imbalance, right? Which is ultimately the same thing, just on a different time frame. Oh yeah, so he's got the same take profits. Take profit 1, these equal lows, and then down here at these lows. Yep, I agree with it. I like it. What type of order? What do you mean, what type of order? Yeah, sell limit. Yep, sell limit. Yeah. Hey, real quick, I have a question for everybody. Does everyone know what OPEC is? Everyone knows what OPEC is, right? Just want to make sure. Okay. All right. Sounds good. Andrew, you know what OPEC is too, right? Mm-hmm. All right. Sounds good. Okay. So let's look at some pairs that I'm looking at, right? Actually, you know what? USD CAD, son of a gun. Ah! All right. Well, there you go, Julio. My bad, man. My bad. Oh, God. Well, I had it marked up. All right. So this was the setup. I guess I didn't see it. It didn't. I had my alert. My alert never went off. So you can see though what happened, right? What did it do? Yeah, exactly. When people ask, what kind of reaction do you want to see, Mike? This is the reaction I want to see. Damn. So the trade house called out this buy right here, and it was off of I think it was like off the 5 minute. It was a 5 minute imbalance, or no, 1 minute. That's what it was. Yeah, right here. So you can see, right, 1 minute imbalance in here, and the play, right? The play was actually off of a down candle off the second time frame. I don't even think it was off this one here. Yeah, I mean, you could have played it off this 50% of that candle if you wanted to, right? Let's just see where that lines up. Yeah, so that was the play off that 50% of that last down candle on the 1 minute. And that's what it was. It was mitigating out of that position. So you can see what happened, right? Where's the money? The money is still intact up here. So Julio had actually asked me if UCAD was safe to enter, and I told him, don't do it yet. Wait till like Asian session. And it just so happens that this sucker took off from us. It happens, you know, it happens. But the play was this candle right here at the 15 minute, right? 15, and I bet if the 30 minute, let's see what the 30 minute, nope, it was the 15. So that was the play, right? It came just shy, right? Just shy, and we're talking 1 pip. It came 1 pip from hitting. On bounce back, they waited for the yeah. Yeah, to each his own. Everyone has their strategy. Me personally, I don't wait for the engulfing. I just enter it. If I lose it, I lose a percent, or I lose 2%. You know, in the long scheme of things, like once you get your mind adjusted that losing is okay, you know, like I said, I only won 54, 58% last week or last month, you know, and I still made out like a bandit. Let's see. Andrew starting with the conspiracy theory stuff. Yeah. So, I mean, that trade right there would have been, stop losses right here. That trade would have been an 8%, 8-to-1 ROI right now, you know. Now, don't quote me on this, right? Don't quote me on this, but potentially if, and UCAD's been known to do this, right? If UCAD rejects again and doesn't take these highs, we can potentially, let me just delete this. It's not even worth it. We could potentially play off of this candle right here, right? We could play off of that candle right there if it doesn't take these highs. If it comes to, you know, if it comes here and then just comes down overnight and tomorrow morning we're in this area here, I am most definitely yeah, the 15 looks the best. I am most definitely going to look to play off of here. But that is a shot, man. That sucks. Yeah, Andrew said it right, man. I mean, break even sucks, but and here's my only advice is I would rather take a break even than a loss, just because it's all about equity preservation, right? Equity preservation. Yeah, it's yeah, I know. Yeah, no, this is the fastest I've ever seen UCAD move, man. This is ridiculous. Man, 1 pip. It came 1 pip. I even had the stupid order in. All right, so we'll just take UCAD off. But so, do you guys see why the market did this? You know, that's the key, right? Why? Now, the only thing I'll tell you right now, though, I might revisit this. Hold on, wait a minute. So it truly didn't come to 50%, and we do have equal lows. So there is money right here. UCAD is my favorite pair. No, I hate UCAD. I hate UCAD with a freaking vengeance, man. Yeah, I hate UCAD with a vengeance. All right, I'll tell you right now. If these highs are not taken, right? If these highs are not taken, okay. So what I'm personally going to do is I'm going to set an alert right here. Well, let's see. Hold on. All right. So if price comes up here and takes these highs, this doesn't count. This doesn't work for me. However, I will, you know, if we come back down, I will look to take a trade off this sucker right here. I mean, we're talking a five pip spread. So just account for, we'll do a 5. Yeah. Just account for your spread. And that should be a nice ROI, right? So just so everyone understands, if these highs are not taken, these highs cannot be taken. If this comes back down, and this is just kind of really a sick, something like this. See how this kind of just played like this stupid shenanigans like UCAD is used to doing right here? If it does that, then this is the play for me, you know, and I'll take that. I mean, realistically, that was 8% in 2 hours, you know. Here, I'll send this out. This is what I'm looking at. All right, Bonnie. Listen, the only thing I can tell you really is you definitely have a leg up because you're at least starting to, you're seeing it, you're understanding it a whole lot quicker than I was. Remember, I'm going on like month 15 for me here, and it's, I still learn things new. It's just a matter of you just got to see it. UJ, so UJ again, DXY broke that. So I told everyone when we were, where's that set up? We got the bounce right here. Hold on, let me go to here. So we got a bounce off of this, right off of this 50 right here. And we were in profit this morning, like 10 pips off the bottom. Where was it? No, it was this one right here. So we were off the bottom, 21 pips in profit. And I think like 10 pips right at 8:30. I had told everyone that I personally was just closing all my UJ trades and my EU, just because DXY had broken structure. It got the reaction I wanted, but DXY ended up breaking, got the alert, so I was done with it. Victor, yeah, I saw it when I was going through on UCAD. Yeah, I think, but like I said, do you set alert limits in case it doesn't break structure? In case it doesn't break structure, no. I always set one if it does, because if it doesn't break structure, then I know we're going. No, that's what I did. So remember in the beginning, I went off, I had that white line. Yeah, this line right here, I had an alert set on it. So if it broke structure, because that's what I was looking at. I wanted this low right here to hold. And if it didn't, there was no sense in holding the trades open, when I was talking about it, I had said that this was the riskier move, just because this is that first move, and originally it did give a good reaction right in here. Where was it? Right here. Here's 8:30. You see that nice reaction. I thought we were going to come in, close the H1, and then come up into this imbalance. But the minute I saw it break down in here, I was done with it. It had broken. We, there was no sense in holding it up. Same thing, EU, right? EU on the, where is it? On the sell, right here. Let's see. Oh, I deleted this stupid thing, but it was in here. Hold on. Bear with me here. We played off of, anyone know what time frame we played it off? Off the I know it was in here. Was it the hour? Let's see. Yeah, it was the hour. Okay. So we played off of this last up candle here, right? And you can see, right, before I went to bed, the order had activated, all right? And I mean, we were 34 pips in profit at 4 a.m. And then that 5 a.m. crossover happened and just took break even out. But before I went to bed, I think I went to bed maybe like around 1, 2 o'clock in the morning after a movie. And, we were in here, so I just moved it to break even. I mean, it happens. It gave the nice reaction. I mean, that was a beautiful reaction, over the next, 4 or 5 hours, 30 pips on EU dropping down, and then whoop, it came right back up and clipped the break even. All right, so let's look at what else I'm looking at here, right? What do you need, Julio? GJ too? Jeez, bro. Jeez. I'm going to throw this on my alert list too. I like that. What time frame was that play off of? Was the 5 minute? No. 30 minute? Yep, 30 minute. All right. All right, here it is. Okay, okay. All right, so UJ right now, I'm just like letting UJ play out. I'm not, I'm not really looking at doing anything with it. However, on EU, right, because my bias is that DXY is going to come down and reach for this area here, right? I am looking for buys on EU. And we have this nice H1, right? Let me show you the H1 imbalance up here. Okay, nice H1 imbalance up here that I'm looking to fill in, all right? So the question is, where's the money? There's the money right there, right? There's the money I got right there. I do have a possible sell up top, but I want to see if I can buy it up first. What's that, Gary? EU setup? It's higher than yours, yes. Okay. Yeah, man, we'll take a look at it. Absolutely. Well, we do have imbalance in here, right? We do have some imbalance in here. And we do have liquidity sitting in here. Let's see. Bear with me 1 second. Let's take a look. So I do like this candle right here on the 15. Let me just see what the hour looks like. All right, so I need it to be below here, right? Because that's where liquidity is. 30-minute. So you can see this 30-minute candle has been mitigated by this, right? So that 30-minute doesn't need to be mitigated. So far, the 15 is all we got. This 5-minute does too. Let's see what the 1 minute. I think I like the 5 better than the 1 minute. Man, that 1 minute too. All right, I'm gonna split it. I'm gonna play it off the 5 and the 15. All right, so that's the 5. This is the 15. So what are we talking? A difference of 1 pip. We're talking a difference of 1 pip. All right, here, let me look at yours, Gary. Let's see. So you're looking off the 1 hour. You are looking. All right, so talk to me here, Gary. Why is your entry 109.46?
Yeah, I just sort of thought because of the imbalance, it's just above that candle, that bearish candle, just above it.
Okay.
And then,
I mean, this setup looks good. I personally would get into this imbalance down here, but let me see, 109.22 is your stop.
yeah, maybe in hindsight now, looking at it, that bearish candle below the one that I was looking to take an entry off would be better.
What are you on the 1 hour, right? Let's see. So you're looking down here. Yeah, so I have that set up down here. I just don't think it's going to come down here that far, right? Yeah, you can see I've got it marked up. Here's the 1 hour imbalance. I was actually So here was the two setups I was looking at, right? Personally, I was looking, let me delete that. So on the H1, this down candle needs to be mitigated, right? So I personally was looking off of 50% of that candle comes in right here, right? Stops right there. All right, so you're looking at about a 7 pip stop loss, all right? And then take it up to this nice candle right in there. And then what I did was I looked at this 50%. Do you see how this 50% comes in at the bottom of the H1? And I think it's the 30-minute. What the heck did I measure? I wish sometimes I was able to put, was it the 4-hour candle? That's what it was. So you can see this down H4, I measured top to bottom. That's 50%, which lines up perfectly with the H1 imbalance. So that would be the two plays. Stop loss still the same, right? 12 pips. So this is honestly how I would attack EU right now, right? So we're talking about a 50 pip drop. Let me see what DXY would look for. I mean, I definitely, I like the setup. I like the setup. It's the same setup I would take. I'm just crunching in onto that candle there and 46, and then my top entry is at 33. So you've got a little bit of a higher, you're coming in off of this up here.
Yeah.
You know, but our stop loss is the same. I mean, there's nothing wrong with taking that setup. You know, I mean, you're looking at a 20 pip stop loss. You know, I might miss the move. You know, if the move doesn't come down here, I'll miss the move. But you know, I'll be able to catch 12 and 6.5 if it comes all the way down. I personally though might still see. I don't know. It all depends on the session. I'll tell you right now, if we are still chucking along here during London session, I would take this trade at that London crossover. Like if I'm up at 5, 6, 7 a.m. and we come into it, I'll take it. If not, if we are still sideways and at like 2, 3 o'clock in the morning, we break through here, I would just go with this bottom setup. The timing is everything. Agent session, I'm expecting some consolidation. I just want to see what would happen during London. Me personally, I may just put an order in a 0.5%, a 0.5% off of this. Because honestly, if I lose 0.5%, I mean, even on a $1,000 account, to me, the risk is worth it. If, I mean, realistically, if you risk 0.5%, I can't even do 0.5, but all right, we'll just split it. We'll go half, right? So even a 0.5%, you're risking $5 on a $1,000 account to make 70. You're making like 60. All right, $57. To me, it's worth it. Just to set it in if during Asian session we're still consolidating. But this right here is the safer play, right? This is the safer play. Here, I'll send this out. These are the two scenarios I would play out, but timing is everything. This definitely would be the safer play. If you only want to trade maybe like that London crossover or New York, I mean, I would wait for it, see if it comes back down. Here, I'll throw it out there.
Yeah, sort of looking at your two entries you had there, originally just below mine, it sort of makes more sense now that you had more confluence in your entries. So,
yeah. It's like I said, it's got to. For me, I just have that mental checklist in my head what I'm looking at. This top one right here is probably the most likely scenario to play out, because it would mitigate the imbalance. It would go into that H4 50% down candle, right? My risk still has to be down here, you know, just in case it comes down here. But this would be the more highly likely scenario to play out. Now, if I catch this, I'd love to catch this, you know, because on a 1% risk, I mean, I know where it's going. Everyone knows it's coming up here. You know, if I can catch this 12% and then this 6.5, I'm done. You know, EU probably would take the entire day to get up there, but I'd be done for the day. I don't need to trade another thing. So, what do you mean? Where do you calculate the stop loss, Julio? On EU? On EU, it's just where does price need to go back to mitigate, right? So just go down the time frames, right? And you can see, so on the 5 minute, right? On the 5 minute, price, really price has no reason, right? Because this down candle has been mitigated, that down candle has been mitigated, right? Price has no reason to go below this area right here. And then on the 1 minute, it's pretty much the same thing, right? Price, you know, if you did 50% of this down move, right? Price has no reason to go below 109.21, and I just went below the wicks, you know, so 109.20. I gave it an extra pip. Yeah, I gave it an extra pip. That's how I played it. All right. Yeah, it's all about the risk, you know, it's all about the risk.
Mike, can you hear me?
Yeah, go ahead.
Hey, can you go back to that screen right there where you were right now? Sorry about that. On that, there's a down candle before the like fast move down, right there. Wouldn't you use that as a right to the left right there, fast move down and then fast move up? Wouldn't you use that as a candle to pay attention to?
Realistically, yes, you could. The only reason I did not, hold on, let's see. Why didn't I? I'm trying to think, hold on. There's a reason I didn't when I was looking at it. It is, hold on, let me go back to it and let me highlight it. I wish TradingView, and I've sent them an email on this crap. I wish like you can like do a zoom feature and like, you know, like on some things where you can just like highlight and it'll zoom into it. I wish you can do that. I think the only reason I didn't is because on every other time frame that's been mitigated.
Okay.
But I think, man, son of a gun. You know, I mean, honestly, just to be safe, I would put it down there. I would put it right here. That's where I would move the stop loss to, just to be safe.
Okay.
Yeah. Good catch, man. Good catch.
Hey, no problem, man. Just learning.
Yeah. Oh man, it is. Sometimes you don't, you know, you'll see it, but you don't. Like you're marking it up so quick. Yeah. There we go. I'll resend this. Hold on. That's the play I'll go off of here. Bam. And so for like people that are saying, oh, you know, well, why keep it down there, or you know, why not? I'll tell you right now. I mean, that's all equal lows. You know, so if the market wants to go, if this is like the point of no return. If it breaks this, it's going to go further down. There's no point in holding drawdown. You know, I would rather take a 1% loss and get a better entry somewhere else. You know, same thing like here, right? I know the market's going up. Why am I going to hold this in drawdown? I would only have to risk 4 or 5 pips, take a 1% loss, and then turn around. And if these activate, I'll catch these and make, you know, what is that, 12, 13% on the way up. So that's how I'll play it. Let's see. If you, hold on, if you look at the 1 minute candle, it's the majority of the thick. On the 5 minute, you want to mitigate where the orders are, which, yeah. So another cool thing, I don't know if you guys follow Zach McDonald, but I watched maybe like a month ago, I watched one of his episodes where you can look at the actual volume orders, right, being played out. And that'll actually give you the imbalance. So like you can come down to this 5 minute. Let me see if I remember it now. Hold on. And you can see, because that's really what you're trying to do. Yeah, you did. Yeah. So you come over here, go to volume profile, fixed range, and then you just want to measure the range, right? So we actually want to measure on this 5 minute here to like here. And so you can see, hold on. Bear with me here. This stupid thing. I'm trying to move it to the front. There we go. Let me go to settings. Show values. So when you see, oh, really? All right, my bad. So you can see, right? 20, 22, 22, 26, 22, 20. There's really no displacement here, right? You know what? Let me change the color. Nope. Where is text color? Let me go to white. There we go. Okay. So you can see that there's really no displacement, right? Orders are fairly even. It's not until you get to right here, 54.22, there's a little bit of displacement right in there, right? 69, 72, 97. There's really, I mean, it's pretty evenly traded. I'm looking for, and then you can get back up in here, 51.40. And really this is 0 by 29. Yeah, I mean, this is a pretty cool tool. I really don't screw around with it too much, but it does, you know, it definitely gives you, you know, you can see the orders on both sides and the volume being inputted on it. So it's a really cool tool. You know, if you really want to like zero in on it on an exact entry, you know. But I would say this area right here, this 54 22 area, and then like right in here, 111.85, and then you can see it flips. So those are the two areas I'd be keen on looking at, you know. All right, let's see. So that's what I'm looking at. EU. Let's look at let's look at AJ. I'm gonna cry. Let's look at AJ real quick. So so what happened is what happened is we played off of that candle right there. That's what flipping happened, man. So I had the order here and I sent this out. I think this morning I sent it out, how I was playing it off of here. But ideally, I deleted the order because it was getting too late in the day and I didn't want to play off of the shenanigans. So off this candle here, you can see that mitigated, right? So that was an entry. That would have been a perfect entry. This candle right here. Let's see where it played off of. Did I use the 1 hour? No, I did not use the 1 hour. 30 minute or 15. All right, there we go. So I was playing, I wanted to play off of two. The higher time frame was the 30 minute, the 50%, that was this order here. All right. I wanted to play off of 69.04, and my stops were just above the high. And the reason I wanted to play off of this high right here, the reason I wanted to play off that high there is there was some 5 minute or 3 minute. Hold on. Let's look at the 3 minute. I saw it somewhere. I think it was this candle right here. There was this candle right here, right, that I wanted to. All right, that's where I wanted to play off of, that candle right there. And then my stops were just above the wick. All right. Oh, wrong candle. My bad. Here's the candle. Let's see. This is the candle on the 3 minute. And then stops were just above the wick. All right. That's where I wanted to play it. So I know Lex Waves was looking at it as well. He, I think, was looking at this H1 imbalance, right? This H1 imbalance created by this down candle and this up right in here. And I don't remember if this was the order that he took here, or maybe it was here. I think it was here, and it went 30 pips in profit, right? Yeah, that's about it. 30 pips in profit. That's what he played off of there. Delete. Oh,
Hey, Mike.
Yeah, go ahead.
Quick question for you. So I see the imbalance in the middle right there, but then as you pointed out the candle on the top, would you suggest or recommend wait for the better entry based on the candle versus the imbalance that was created for the 1 hour? Just for the better entry if you're trying to sell from the top versus from the middle.
Yeah, no, I mean, that's kind of why I split the orders. I definitely wanted to catch this, listen, if I can catch those Kmart blue light special prices, man, I'm going to get it. I try to play with the smallest stop loss I can.
Right.
I mean, on this AJ one right here, I mean, we played with a 7 pip, it was a 7 pip stop. And this thing is just melting. Oh, this is what drives me bananas right here, man.
And one last question. Do you recommend your first entry of the 1 hour imbalance? That's, let's say, 1% of your account. Yeah. And the second entry, which is a better entry, do you risk the 2% or do you go?
No, 1%. I only do 2% a position. So
okay.
1% here and 1% here. And honestly, I just do this one here so I don't miss the trade.
Fair enough.
It's, I don't, because if this only came to here and then dropped, all right, in this scenario, I would have made just under 3%. But if this plays out like the way I'm thinking, I'm going to make 3% and then I'll catch another, 10% with this move here.
Gotcha.
So, but yeah, that was the play. You could see it happened right at 4 p.m. So I deleted my order sometime in the afternoon just because, like I said, AJ has ridiculous spreads during Sydney session. So this definitely would have, if I would have left this in, it would have hit my stop loss. I think the other day I had like a 14 pip spread on AJ during the crossover. So it just wasn't worth it. But this is what irritates me is, the analysis was right on. And yeah, it just, damn, man, damn. And if we would have played it off of that one candle that I wanted to play it off of, I mean, you're looking at, I think you only needed like a 5 pip, not even a 5 pip, a 4 pip, 4.5 pip spread. And where price is at right now, you'd be at an 8 to 1 ROI already, If I would have taken this trade though, one of my first take profits, because like I said, I'm not in it to try to catch every pip. I take it to that'd be my first target area to equal lows. I mean, on that move right there, you're still at a 7 to 1. So if you did 1%, 7% on that trade, if you're looking for 5% a day, you're done. One trade done. you know. Yeah, damn AJ, damn. All right, so AU, let's look at AU, right? So on AU, I am actually looking at two scenarios, right? First and foremost, my target, right? My target is to fill out this daily imbalance that's still left up here, right? That's what I'm looking at. There is a weekly candle. I can delete that. I don't need that. So you can see this weekly candle last up before the drop, right? That's 50% of it right here. So I'm going to be very cognizant of it as we get closer to this. I'm also looking at, I was looking to play something in here as well, but the only reason I'm not, and again, let me go. So 30-minute, so the 30-minute candle's nice, right? But that's very, very large, right? We can get into something smaller. So you can see the 15-minute is a little smaller. So here's the 5-minute, right? This is the 5-minute. The only reason, and actually right now is looking pretty nice. The only reason is because there was really no liquidity for it to take, right? Now, if this continues as AU does, right? So if we get, like hypothetically, if we get something like that, and maybe some more of that going on like that, then this setup is what I'm looking for, all right? But right now, there really isn't a ton of liquidity for me to play off of this, right? Now, we do have some nice equal lows here, and we have a ton right here. But we're talking about a 76 pip move for AU, right? I mean, just think about the last time it was here. It took a day and 9 hours just to get where it's at currently, you know? So this to me is the safer move, right? Off this 15-minute. Let's see, is it the 15-minute? No, it is 30-minute. Nope. 1 hour? There it is. I really wish I could label like on here, but I can't. So I'd like to play off this 1 hour because it would grab liquidity, and then, you know, we can run it up. We can run it up, you know. This is definitely my safer setup that I'm looking at. Now, like I said, if we dance around here and create some more liquidity, I will definitely go to play off this right here. Right, and even if I want to just take it to those equal highs, because we definitely have some liquidity up here, right? You know, that would be my first target. And I mean, this right here, you're only risking 3 pips, you know? I mean, you can, you know, just to account for the spread, figure out what the spread is on your broker. But I mean, that's an 11-to-1 ROI, just taking it up to here, you know? But this would be the play I would make off of that, only if we consolidate more. If this just starts to tank, I'm not taking it. You know, it's all about understanding why the market is going to where it's going, right? So I'm trying to figure out, all right, everyone knows that AU is on an all-out bull tear, right? I mean, just look at the higher time frame, right? We are literally on an all-out nice run with very little pullbacks, right? I mean, This right here was only a 38. It looks like a 38.2 retracement. Yeah, that was only a 38.2 retracement. There hasn't been any other retracement since. So that's the only reason I was really looking at that 5-minute candle. But I need some liquidity to get built, right? I need it to maybe come here, dance around, and maybe in the next 5-6 hours, then be able to take a move. But that's what I'm looking on AU. AJ's just melting, bro. AJ's just melting. I'm not trading that. Just take that off. So Euro GBP, we took that last, what was it, yesterday, right? Or this morning. Just going back to here, right? I was looking to play off this 1 hour candle, right? This 1 hour candle. I sent to everybody, you know, that I was at break even because we were some pretty good profits, right? That was the play. Stop loss was just below. There's my stop loss on that white line. So it was a six pip stop loss. And I was targeting up to here, right? Up to the equal highs. And you can see we got a really nice movement. I mean, it did go, that's the move I want to see, you know. We did go 22 some pips. I was at break even, you know, and then the next candle just took us right out. So, you know, it is what it is though, you know. I mean, Gary, at the end of the day, you know, you could be like whoever is still in these trades here, you know. You know, I personally, I'm just, EG is right in that book with UCAD. I hate EG. I don't know why I keep trading it because it never does what I want. It only does what I want when I'm not trading it. Like this down here, I didn't trade it and look what it did. And then I tried to get into a trade here and it just, look at this sideways crap, you know. Yeah, every time I trade EG, it doesn't do what I want. Every time I have a markup on it, but I say I'm not going to trade it, it does exactly what I want. So, but that was EG. I'm done with it. I'm not, you know, break even. It's break even. We got out unscathed, you know. Yep. EJ. What do I have on EJ? I was looking at something, but no, I got nothing on EJ. GJ we gave out. I'm going to set an alert on mine though. I do like this trade only if it, I mean, I'll split it, but I do like this trade. I'll set my alert right now. Can you send the chart? Yeah, for G. Yeah, absolutely. I played it off. What time frame did I play it off? 30 minute? Yeah, 30 minute. All right. So I played off that 30-minute candle and then, like I said, I'm throwing the Grand Slam lot up at the top there. And I think I played that off the 5. No, we played that sucker off the 1. Yep, we played it off the 1. So that's the candle I'm playing off the 1.
Mike, so when you take those small, like off the 1 minute candle, the pips, the spread is sometimes it's like 6 pips, 10 pips. Do you add more pips to the stop loss just because like I don't want it to wick me in and then also, you know, put me at a stop loss at the same time?
Yeah, no, yeah, absolutely. Account for your spread, but I'll tell you right now, if the spread is 6, 7 pips, I don't trade it. That's okay. Why there was one trade today. I had an awesome setup on something, and the spread was like 9 pips, and I deleted the setup. I was like, I'm not even looking at it. It was either a euro or a GBP pair. I don't remember. Oh, you know what? It was GCAD. That's what it was. GCAD was like a 9 pip spread, and I had, yeah, look at that. I deleted it. I deleted what I had on it. I had an awesome setup on it, but I was like, no, it ain't worth it. You know?
So with this, does the spread changes throughout the day, or I mean, like when you're marking up the chart, the spread could be really good, but by the time it actually gets you wicked in, the spread could be higher, correct?
Theoretically, yes. It's all based off the session. So
Okay.
Sydney session, the spreads are ridiculous because it's the brand new day. And it's all based on volume. So the more volume in the market, the lower the spread. So New York session and London session are going to have your lowest spreads. You know, that's why like I trade US 30 a lot. So I might have a 1 point spread during New York session, but right now it might be like 8 or 10 points, you know? So that's honestly, that's why I don't trade a lot. Yeah. Right now on CoinEx, it's 5 points on US 30. You know, we're talking, you know, Euro NZD is 5 pips. I mean, that's ridiculous. 6 pips on GN. Yeah, I don't like to have that high of a spread, because it especially when you're dealing with small entries, you know, it you know, it throws it out. I'm actually potentially looking off of this. I mean, it's nowhere near, but just so you guys can maybe like start marking up stuff. So this candle, this 30-minute candle on GCAD, you could see these nice equal highs, right? I mean, we're ways away, but I would, if price does pop up in here, I potentially could look to take a sell from here off GCAD. And there's also, is it on the 5-minute? There it is. So on the 5-minute, you could see that nice little last up candle right there. That's where I'd take my second entry. You know, you're talking about a GCAD trade where you can potentially get in with only needing maybe a 12 to 15 pip stop loss, you know? So on a pound pair, that's pretty awesome. You know, that's a really good setup. So that's GCAD. Let's see. NZD CAD. So last week, it sucks that this happened on Friday, man, because I don't trade Forex on Friday. There was the setup that I had. We were playing off of this 1 hour candle, right? That was the first order off the 50%. And then I think we played off the 5-minute. Oh, you took the trade, Gary? Off NZD CAD? Really? Good for you, bro. My rules say I can't trade on Fridays, so I didn't even take the damn thing. So you could see the 15-minute. So you could see the 15-minute candle. That was 50%, right? There was one on the 1 minute, but that's why I just incorporated the stop loss. And you could see price at, what time was this? On Friday at, what was it, 2:15 in the morning, activated, and you had a what, a 0.5 drawdown, 0.5 drawdown, and it was I accounted for an 18 pip stop loss. I should have gone tighter, but yeah, I mean that was a nice, you know, it took forever, man. I don't remember the last time I traded NZD CAD, but it went for 76 pips, you know, so it was at least a 3-to-1. You closed out in 30 all right. Hey, still it's 30 pips, man. Yeah. So I'll tell you what, this is actually this is a really good trade to understand how to manage your setup, right? So let's just go with this, right? This was your entry, right? Here's your entry candle. Okay. So where does price need to come back up to mitigate? No. Did you take it off the? I think Victor's asking if you took it off the 5-minute, Gary.
What was the date today?
So again, how do you manage a trade, right? So here you go, right? Understand, where does price need to come back to? Okay. So price came. right? This candle mitigated that candle, okay? So now just keep going down, right? So here's your next up candle, right? Well, it didn't mitigate on here, but it did right there, right? Look at that, bam, you're out of that candle, okay? So now these candles here had to mitigate something in here. So let's go to a 1 minute. Right? The 1 minute. Shenanigans right here, man. Wasn't the 1 minute. It's got to be on one of the second times because the 1 minute didn't get mitigated. But you can essentially see, right? You can essentially see that there is a last up candle right in here that needed to get mitigated, right? It didn't, you know, it didn't fully mitigate, but that's where I would have had my stop loss. Stop loss would have been just above here. And you just keep playing it. So now, where's your last up candle, right? You know, these all here are getting mitigated on the second times, right? Let's go to a 5 minute. Let's see. So you can see this got all mitigated out. Why did all this come back up? Let's see. So when you see this here, just find where, when you're managing your trade, you just got to find out where price needs to come back up to, right? So you can see this candle here, right? This candle here. Wrong way. Going to be on a different time frame. That's all this did. This was the worst walking the stair or walking down the stairs. You can, there it is right there. 5 minute. So that mitigates out here. Bam. And so on and so on. Yeah, this is going to be one of the longest trades in the history right here. I mean, it might take an entire month for this damn thing to get down here. All right, that's NZD CAD.
Hey, Mike.
Yeah.
Yeah, hey. Just wanted to ask your opinion on something. So if you look at NZD CAD, you look at the where we came in to our entry. You look right above that high. Mm-hmm. So no, not here. The high that we came into. Mm. Yeah, right
this
there.
Up here.
If you look right above it. No, to the left. The high we came into.
Yep.
Yeah, that one there. Look, if you look right above it, the previous high.
Didn't get
you see that candle right there?
Yeah.
Yeah, dude, and that move is serious. And I was thinking NZD CAD might be moving sideways the way that it is now because it might be looking for one more push up to come in and take out all, like, I mean, there's a lot of orders sitting here clearly.
You know what's going to do that? I'll tell you right now. Here, wait, hold on. Let me set the stage. Let me set the stage for you here. I always do it on the wrong freaking one, man. Let me set the stage. All right, so there's that play, right? Hold on. Dude, NZD CAD, that's the other thing I noticed on Friday because the market was closed. Dude, NZD CAD had 104 pips spread on CoinEx. It was ridiculous. All right, so here, right? That's the play, a 33-1, right? You know what'll get us up there? This stupid thing going down to 17. Right there. That's going to cause that to go up there because that CAD weakening is going to increase the NZD and weaken the CAD. The other thing too is NZD is very, very reliant, just like the Aussies are, on the Chinese economy. So as soon as they get back rolling, you should start to see this kind of recover a little bit.
Hmm.
Yeah.
I just thought that was a great play. If oil
No, it is.
came down, and I mean,
It is. Yeah, absolutely. That's honestly, this play right here was one of those I was willing to give up and just take it off that one, because there is nothing, right? There is nothing from here for what I think 100 pips.
yeah,
130 pips. There's nothing. So this to me was like the line in the sand, right? You know, if it breaks this, no, we're not mitigating. We're going up for higher prices, you know? So yeah. All right, Bonnie, absolutely. Sounds sounds good. Have a good one. Yeah, no, I like NZD CAD. Who else is what else is everybody else looking at? I mean, I honestly had, like I said, EU is what I'm really looking at. This son of a gun, bro. EU is what I'm really looking at. I was looking at UJ, but I personally, I mean, man, this thing is just running. On S&P? Yeah, hold on. Let me pull it up, bud. Hold on. Let me find it. Oh, thanks, Gary. Did you actually take the trade, Gary, on demo? Awesome. What was this is the one right here, right? Okay.
Yeah. Yep.
Walk me through it. How did you find the entry?
So there's a 1 hour candle, which you obviously can't see. You want me to just share my screen? Is that be easier?
Yeah, bro. Hold on.
Okay.
Actually, here, I'll tell you what. Do this. I just found this out, bro. This is awesome, right? So, hold on. Where are you? There you go, bro. You can control my screen. Go ahead.
Oh, okay. So yeah, so that
are you able to? Let's see.
Red candle. Right,
there you go.
Right
awesome.
There. Yep, that red candle was the one. It hit right here, right before 5 o'clock, and then immediately it came down at 6.
And so you mitigated off of it.
Yeah, and it was off of this 1 hour candle. Oh, let's see what level it was on here. So way back on March 11th, I think it was, because you had told me to look at a candle on March 10th or vice versa, and that one was below.
Okay. Yeah.
Price already. So it was right here, this candle right there.
Okay.
So it had gone up, and then the 50% was right there.
Okay.
And it hadn't been mitigated. So I just wanted to get your feedback on I mean, is that an entry? I know it was counter trend, but I'm just playing around with this and it's in demo. So I just wanted to kind of, be able to take a trade that was based on actual analysis. And
yeah, I mean, here, let me take a look at this here. It's,
I cashed out already. It started going sideways on the 15-minute.
Yeah.
So I took my 2%, and I had 2 positions actually. On the 15-minute, it actually came back up to the 50% of that first bear candle. And so
you literally had no drawdown. That's an awesome.
No, not at all.
That's an awesome setup. Yeah, listen, one of the things I can tell you about like this whole smart money concept is you're going to lose trades, right? But your loss is going to be very minimal. It's one of those, like I remember trading and having 30 pip stop losses and being in drawdown for 3 days.
Oh yeah. Yep.
And just the agony where now today I took a loss on S&P or on the Dow. I don't remember what it was. It was over in 5 minutes.
Yep.
It was over in 5 minutes. And then I was able to catch 9% on the very next candle,
It's either going to go your way or it's not.
Right. There is no, and honestly, for those that are like, well, like the loss I took on the Dow today was a buy, and look what ended up having, right? We ended up going into profit.
Right.
But you know, I've blown enough accounts that I know that it only takes one time for you to say, oh, it's going to come back. Oh, it's going to come
Right.
back. Oh, it's going to come back. And it never does,
Right.
I'll tell you right now though. So if you wanted to play it safer, right? If you wanted to play it safer, the safer mood was on this engulfing candle, just play the 50% off of that.
Okay. I did that too.
Oh yeah. Perfect, bro. There you go. That would have been the safer move. And then just your stop loss is the open of that candle.
Okay. So just wait for the move that could happen.
Yeah.
And when it
Yep.
does.
I mean, that's honestly so me personally, I take that first move, right? So like when the Dow gets up to where I want it to get up to, I'm going to take that first move, sell.
Right.
If I lose it, I lose it, but now if we get that nice move down, I'm just going to start, taking, like my area of take profit would have been right here at these lows, right in there. So that would have been,
Yeah. That's where I took profit.
yeah. I mean, that's a 5-to-1 ROI, just off of that.
Yeah, it was my stop loss was a little bit higher and probably obviously way higher than it needed to be with no drawdown, but it was a little more conservative and but so I just netted like a couple percent, but it was off the 2 positions. But I mean, I'm just trying to learn this stuff and get a feel for what they look like and what they feel like as they're running. So.
Yeah, and all like I said, all like this right here was just, I don't even have to look at it. This was just 50% of that candle, right? So all I did was just
look at
that. Just mitigate. I mean, like you start to see it enough. Like sometimes I don't even have to throw the fids on anymore. I know, all right, boom, I could just market execute if I'm at the computer here.
Right.
But yeah, you only need, 1 or 2 of those trades a day and you're done. You are literally done. It's that was a good setup. The Dow, obviously I still think we're going up higher.
Right.
Look at that sucker, bro. It bounced right off of that area. I personally want to see where we're at though, tomorrow morning. Cause I personally want to see if it will come and, what did I do? And play off of, there we go. And play off of something in here. But yeah, I personally don't trade any of the indices anymore at night just because there's too much computer influence. The algorithm is going to do what it wants, where I would rather deal with an actual human, the actual traders. Because like I said, man, it's a cat and mouse game. What are they reaching for? What position are they in? Because even though they say don't have emotions in trading, but darn well, if you are the Dow Jones trader at the trade desk for Morgan Stanley, and you're trying to do this and that, you're going to have a little bit of emotion.
Sure.
So, and my prayer is that one day I'm going to get that rookie trader who's in drawdown $1 billion, and I'm going to be able to catch that 50-to-1 move, on the Dow.
Right.
I doubt I'll ever. Those guys are trading UJ or UCAD, so
right.
Yeah, but yeah, that's an awesome move. Yeah.
Right.
And yeah, so tomorrow do the same thing. Just wait for, like I said, identify where's the liquidity. That's honestly what I do. I wait for that 9 o'clock. I normally wake up between 8 and 8:30. I catch a quick, glimpse of what Lex Waves is giving out. And then 9 o'clock, I start looking at the indices. All right. First thing I do is where's the liquidity? Where's the liquidity and where's that last down candle? I can see that candle right here potentially being an area of focus,
Okay. I was going to ask you, where are you looking for entries back up? Okay.
If this starts going sideways, which is, ideally what I want. Yeah. we're going to have the liquidity, this bad boy right here is going to be my area of focus, but I need that liquidity, so
Right.
that's ideally what I'd like. And realistically, the Dow has already mitigated this area, that was the play, that play right here. See that imbalance?
Okay. Yeah.
So the Dow's already mitigated that. So like I said, I'd be looking for the Dow. I'd be looking into here as well, but I want to see what happens. We might have that liquidity being built we're going to have that liquidity being built here, but dude, it's too early to be trading it. So, I'm personally not going to be doing anything, and this stupid thing is just going sideways again.
Okay. Yeah. I think what was most eye opening for me, and as I've been going through the smart money training and listening to you and all the live sessions, is how far back I was able to go and find a position. I mean, it was over a month ago.
Yep.
That candle.
What's going to frustrate you the most is, as you get further in time to the left, you can't get into the smaller time frames.
Right.
So,
okay.
Where you may be able to get into a 5-minute, awesome, Gary, have a good one, dude. I'll catch you later, man. Where you'd be able to get into a 1 or 5 minute position with a tight stop, you can't, because you got to work off of a 4-hour.
Right.
All
right, cool. Thanks.
Yeah, no worries, man. Anyone else have anything else they want to look at? If not, GJ is a pretty good setup. AJ can freaking kiss my butt, man. AU is another thing I'm looking at, right? I'm personally not looking to trade it right now. I'm personally going to wait to see where we're at around London. If I'm up, if not, I'm going to look at New York. I don't need to be the first one to catch the move, right? If this does happen, right? If this does happen in the next hour or so, say it comes here, we get that nice movement, right? And it bounces up, I'll just catch the pullback. Wherever it is, I'll catch the pullback. Much like this move right here, right? You can see how price came in, bounced up, and then came in to mitigate the imbalance and then come up. I'll just catch the move. I don't need to trade, constantly all the time. I just need to crunch my ROI so that I don't have to be in a trade long enough. EU is another thing. Again, EU is what I'm looking at. EU, GJ, and if that UCAD plays out. If UCAD comes back down, I'll take UCAD. So that's really all I need. Yep, I'll send it again. Yeah, here you go. So stop loss in the red, the 2 entries are in gray, and then so first target is, again, these equal lows right here if they're not taken, right? If this pounces through, then don't worry about that. I'd be looking at this and then down here. All right. So it's just understanding where the market's going to go. All right. Yeah, Victor, have a good one, man. Hey, I'll see you tomorrow, bro. Let me know if you're looking at anything tomorrow. All right. All right. Sounds good, guys. Well, if there's nothing else, you guys enjoy. Have a good night, and I'll see you guys later.